снег, серый лед на растресках.
This is the best machine learning indicator and it also has the most favorite on tradingwave.com. So we are going to use two different indicators and both of them will be free to use. Now we will go to indicators tab and search for Lorentzian and you will see indicator from GDE Horty machine learning. Click that your chart and you can see that this indicator has 18,500 favorites, which is very nice number for TradingView. Now we will close this tab. We will go over the settings to take a look what is offering us. If you go to inputs, you can see that you can change a lot of things here. You can change the feature engineering, you can set up filters, you can set the kernel settings and display settings. What I suggest is when you put it on your chart, the first thing what you want to do is use it on default settings. See how it performs, see how it will give you the buy and sell signals. Try to understand why it gave the signal and how it gave the signal. So if you go to style, you can see a classic things here, the bar color, buy and sell signal and all that stuff. So what we have here also in the chart, if you look over the chart, we have a top right corner here, a win rate, the trades, the VL ratio and the early signal flips. So basically you can get all the trade stats in a just like this. So and what I like about this indicator is it will give you sell signal, buy signal. Also it will plot this line over here, which is basically red means bearish, green is bullish. It is very simple. And what is more interesting about this is it will plot these numbers. And what are those numbers are so simple. If you remember the Laxalgos indicator, the AI classifier, it's basically very similar. It will plot -6 if this is a high prop signal or trend continuation in a highest way. You can trust this down candle if the number is high. So -6 is the high number, the -2 is the low number, and if you go back here you can see that on the green ones you will get the 8 and you will get the lowest numbers. Also you get the 2, you get the 4 and all the things you can see here. You can get the 0. So you get the idea. When the number increases, the trend string is increases. When the number is decreases, the trend string is decreases. As all of you guys know that I don't like to use only one indicator. I would like to combine with something that confirms the signal over here and confirms the whole price action. And now what we do now is we will go to indicators tab. Get ready to take your trading to the next level. I have passed lot of challenge account easy like 3 to 1 with Laxalgo Premium. These indicators are here to guide you in the darkness. You can use Laxalgo indicators on any market you want. Laxalgo has 3 different trading indicators, signals and overlays, price action concepts and oscillator metrics. The great thing is they all have their own backtesting system. Click the link in the description to claim your discount now and add one of our favorite indicators, which is a Hulsi, right? And you can see that it has a 13,000 likes. Click at your chart. This actually very old indicator, but I think that no one found it out yet or whatever it is. So the machine learning indicators are so hyped now, so I think that's the reason. But this indicator deserves the hype. Now we will learn how we will combine these two beautiful indicators. So as always, we will be taking live trades here. We enabled the replay mode, and we will take all the signals that appear on our chart, and we will learn which one to take and which one not to take. So let's roll the market. Now the New York session is about to open. I highly suggest also, you know guys, that trade only the New York AM session if you want to testing something new, because there is a high volume in the market. So what I basically waiting for is a signal, and this is the signal that I want. So let's replay back the chart and let's analyze this, what's going on. And we got this Hull suit over here, and if you don't remember how Hull suit is working, when you see the green, it's a bullish signal. When you see the red, it's a sell signal. It's very self-explanatory, and we will be combining with the Lorentzian Classification indicator, and we got a sell signal here, and this candle closed with the -6. It is the one of the highest number you can get with this indicator. The highest is the -8, and this is the -6. So we will be taking this trade. Why? Because you can confirm with the line over here, it is also red, and the whole suit gave you the red. And what we will do now is we will execute a short position here, right? So let's go with the 10 micro contracts here. We will be trading Nasdaq, as you can see. So take profit will be here normally, but what we will do is we will watch out very closely this indicator to see when the Hull suit or the Lorentzian classification drops the numbers or change the color, we will take an action. Now you will see what I'm talking about. Let's roll the market. The market is ticking, and you can see that we just banked this trade and we made $1,200 just like this. The trend was so strong, everything went perfect. So you can see that these bars closed in a very bearish way. The whole suit was red, so this was a perfect trade. Now let's roll the market to see one more example together. While we are watching the market, what I can suggest you is, rather than closing your position the recent lows, what you can do to increase your win rate and the profit is you can trail your stop while the price goes down, and you can watch out for the Hull suit and the Lorentzian classification. When you get green from the Hull suit, you will be out of the position, and that can be your perfect signal to exit from the position. Now let's roll the market if we get any buy signal, because the Hull suit returns the green. I want to see that a new signal from the Lorentzian also, but the market is keep tanking, so we are watching out the market. There is no new signal for us. Look at this madness over here. We got a new sell signal over here with the Hull suit confirms it. What you can do is you can initiate another short position with the bar close here also. That will be no problem. And as you notice something, that you don't need to get one buy one sell signal, so it can give you two sell signal in a row. So some indicators doesn't make that, but this indicator will give you two sell signal in a row, which is, I think it's a good thing. If you missed this one, you can rejoin from that one. So what you will do is you will write the trade until you get green from the Hull suit or the Lorentzian. So you get the first green here, you can close your position here. What I'm expect is a new signal coming together with the Lorentzian and the Hull suit to show you. So we got a sell signal, the line is red, but the Hull suit doesn't confirm it. So what you gonna do? You will not take this position, because if you take it, you will break the rule. Our rule is all the indicators must match to enter a new position. Let's roll the market. I hope that we will get a new signal, because there will be opportunity always in the market. So we got a buy signal here from the Lorentzian, and we got green from the Hull suit. What you will wait for? You will just execute your long position here, and you will target the recent highs if you want, or as I said earlier, you can write your trade manually while watching the whole thing here. So let's put the take profit here in case of the price rockets up. So the stop loss will be somewhere here, which is the recent support line, or you can use this one, and I prefer that one. So let's roll the market to see if we get hit or miss. The price is ticking. You can see that all the numbers are high numbers. It is 8 and 6, so it means that there is a high bullish trend going on, which is a very nice thing, because when you are holding to your position, you want to see some confidence in your trade, right? So the market is picking up. What you can do also is you can take some partials on the way, and what we get here is the sell signal from the Lorentzian. So let's roll the market. Let's see, because normally you need to close here with the bar close because you get the new signal. I just want to show you what will happen, and as you can see,
today we will be testing the machine learning logistic regression indicator. Before we do, if you have not watched the first videos on the channel and the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. You can find a link down below to sign up for TradingView. If you use that link, you'll save a little bit of money on your account. You can also find a link below to join us on Discord. If you are interested in a full list of all the indicators and strategies that we have tested along with their win rates, you can sign up for our Patreon, and you will receive a full list of all the indicators and strategies that we have tested. You can find a link to our Patreon down below in the description. We also have a Patreon-only exclusive Discord channel where we will give you a list of winning indicators, a list of winning strategies, post trade ideas, give advanced advice, and much more. So click the link below to join our Patreon. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 102 different strategies, with 30 of them being winners. The best one so far was able to achieve an 84% win rate. That is the Academy of Forex indicator with the Z-score probability indicator. I'll put a thumbnail of that up on screen right now, and I will also link to it at the end of this video with that same thumbnail. That way you can go straight to that video and watch it on the best strategy that we have tested so far. We've also tested a total of 960 indicators, with 402 of them being winners. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. So go back and watch those videos and see what you can get out of those winning indicators. We've also retested in the advanced testing 110 of the winning indicators. 39 of them have been able to maintain the winning status, the best two, a 76% win rate. And keep in mind that we test most of these indicators and strategies on the Forex and crypto market, but they can be applied to just about any market and time frame universally. Okay, so today we are testing the machine learning logistic regression indicator, and you can see it here on screen. And so the source video says that this is the best AI powered buy sell trading view indicator. And so the indicator itself, you can see here has these tags here, these blue tags and pink, burgundy, whatever you want to call them, the pinkish red colored tags. And so we have the blue ones and the pinkish ones there. And so the blue tags are going to be buy signals, and the pinkish tags are going to be sell signals. And so we haven't changed any of the settings other than to go in and turn off the show info, which just has a little panel here at the front of price action, just kind of showing the accuracy of what it was up to this point on the number of trades that it looked back on. And so other than that, like I said, everything else is on default. So when we get a blue signal, blue tag, we are going to go long. When we get a purplish pink tag, we are going to go short. So that's how we're going to test it today. Let's go ahead and get on with the testing and see what we can get out of it. All right, so we have some rapid fire action here. So the first signal that we picked up was a short signal, and immediately on the next candle we flip back to a long, stopping us out on that short. And then a few candles later, as we make a push to the downside, we then flip from the long to a short, stopping us out on that long. And then same deal, a few candles later, as we make a push to the upside, we then flip back to a long signal, stopping us out on that short. And that long signal does make a nice push to the upside, finally getting us to a take profit. Let's go ahead and continue on. Alright, so we then pick up a short signal right here. It pretty much goes into consolidation, and then a few candles later, we then pick up the buy signal right here. We get enough of a push to the upside here to get us to our take profit. So what we're going to do now is just go ahead and fast forward through the rest of the testing. That way things don't get too long, and we'll pick this up when we're at the end of the year. Alright, so that puts us at the end of the testing right there. Before we take a look at what this was able to achieve, if you are looking for a profitable trading strategy, I highly suggest you check out the best strategy that we have tested on the channel here. It was able to achieve an 84% win rate. I'll put a screenshot up of the thumbnail to that video right now. I'll link to it up in the corner, and I'll also link to it at the end of this video with that same thumbnail. Like I said, it is a highly profitable trading strategy, was able to achieve an 84% win rate. It uses one of our custom indicators that we've developed here on the channel, as well as a trading view indicator, and all around it is a wonderful trading strategy. I highly recommend you check that out. And so there is a lot of benefits to becoming a patron of the channel. I highly recommend it. Alright, so let's go ahead and take a look at our indicator here. Let's get a scroll back here. So we've got quite a few trades within the 1 year's time, so we can't complain too much about the number of trades. Maybe can't complain. Depends. It definitely looks like it's nearing the over trading status at this point, but it did start to pick up some decent amount of wins. Surprisingly, the first 4 or 5 trades there were looking kind of grim, but then we got on this nice little win streak right here, which kind of gave me a little bit of hope that maybe this is going to turn out okay. So let's go ahead and count this out and see what we have. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, and 40. So we have 40 trades all together in the 1 year's time. Like I said, that is definitely nearing that over trade status. But let's go ahead and count out these winners and see what we have. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and 18. 18 winning trades. So that is not going to meet the 60% criteria that we are looking for. And so a little bit less than 50% on the win rate there. And so, like I said, definitely an over trader. Anytime we get an indicator that gives us over 30 trades in 1 year's time, it always seems like it can't do so accurately. And so that's a pretty good indicator. If it's over the 25 to 30 trades in the 1 year's time, it usually doesn't turn out too great. And so this one is definitely not the best AI powered buy sell indicator.
Even though many strategies based on or generated by AI have been popping up, these strategies always use basic and pre-existing indicators. There haven't been any indicators that actually use machine learning to determine the exact point at which you should enter and exit a position. However, this has recently changed. A machine learning indicator was just released that provides profitable and precise signals for entering into positions. In today's video, we will be showing you exactly how the machine learning indicator works and how you can use it to know exactly when to enter into a position. Let's first add the indicator to the chart. Head over to the Indicator Search tab and search for the Machine Learning Lorentzian Classification indicator. Select the indicator made by J.D. Horty. The indicator is based on the Lorentzian Distance Classifier, or LDC. It's important that we first understand how the indicator works so that we can use it to its full potential. The Lorentzian Distance Classifier is a mathematical tool used to measure how similar or different two things are. It works by comparing the shapes of two Lorentzian curves and calculating the distance between them. Think of it as comparing two songs and seeing how different their sound waves are. This method is often used in signal processing and data analysis to help identify patterns or differences in complex data sets. The indicator we just added to the chart demonstrates how Lorentzian classification can also be used to predict the direction of future price movements when used as the distance metric for a novel implementation of an approximate nearest neighbors algorithm. Even though this may seem a bit complicated, the indicator is actually really easy to use, so let's go over how we can read the indicator. The first feature you might have noticed is the numbers that are plotted below every candle. The numbers it plots range from 8 to -8. These numbers represent the categories the model assigns to each candlestick. Simply said, the more positive the number is, the more bullish the sentiment is, and the more negative a number is, the more bearish the sentiment is. A large sequence of these numbers can help with identifying the strength of the trend. The second feature of the indicator is the kernel regression line. This line is estimated based on the kernel regression. It can be seen as an extra confirmation to confirm the predictions that the machine learning model provides. The third feature, and one of the most important features of the indicators, are the green or red envelopes that it plots. A green envelope signals to us that we can enter into a buy position. The opposite is true for a red envelope, which signals that we can enter into a sell position. Along with this, in the top right of the chart, there is a small table that showcases the statistics of the indicators, such as the win rate and the number of trades that have been taken. Now that we know exactly how we can read the indicator, let's take a look at how we can use it to enter into positions. But before that, if you are looking for a broker that has extremely low commissions and spreads, then check out Henko Trade. The best broker to trade forex, indices, commodities, or crypto. They have live chat support so that any questions you may have can be quickly and easily answered. One of Henko Trade's most prominent promotional offers is the matching deposit bonus that can be claimed when you open an account with Henko Trade. Sign up via the link in the description to register with Henko Trade and get access to all of these perks. By default, the trade stats of the indicator show relative performance based on a hold period of precisely 4 bars, which is what the model was trained on. So the most basic way of using the indicator is by first waiting for the price to trade above the kernel line. Along with this, we will need for the kernel line to be green, showing us that the trend is bullish. After that, we will need a buy signal to be displayed. Once the candlestick where the buy signal was displayed closes, we will enter into the position. Then as soon as 4 candlesticks pass, we will exit the position. Here we see that the price is trading below the kernel line, along with the kernel line being red. This signals that the trend has switched to a bearish one. As soon as the candlestick where the sell position is displayed closes, we will enter into a sell position. Once 4 candles pass, we will exit the position. Even though this is the most basic version of the strategy, there is also a second, more concrete version that we can use. To use the more concrete version of the strategy, we will first need to enable it in the Settings tab. Head over to the Indicator Settings tab and check the Dynamic Exits checkbox. The table will now update. However, since we don't need it, we will be disabling it to make the chart less cluttered. To do this, click on the Style tab and uncheck the Tables checkbox. That was all that we needed to do. When using dynamic exits, we will first need the price to be trading above the kernel line. Along with this, we will need for the kernel line to be green. Once a bullish signal is printed, we will enter into the position. We will be placing the stop loss at the recent swing low. Then we will exit the position once the kernel line switches colors and becomes red, showing us that the bullish period has ended and that the trend is switching. As you can see, this occurs here, so let's exit the position here. The strategy is already extremely profitable. However, there is still one thing it doesn't consider, which is the larger trend. As you can see here, we are in a large downtrend. Despite this, the indicator provided a buy signal. To avoid these signals that go against the greater trend, let's add one more indicator to the chart and create a full strategy with the indicator. Head over to the Indicator Search tab and search for the RSI indicator. Select the indicator made by TradingView and add it to the chart. After that, head over to the RSI indicator settings. Since we are currently on the 1-hour chart and want to get a larger view of the trend, let's change the RSI timeframe to the 4-hour chart. Now let's change the style settings of the indicator to make it more visible. We will first be changing the color of the line. After that, we will be unchecking the elements of the indicator that we won't be using. That was all that we needed to do. Now let's take a look at when we will enter into a position with this strategy. To enter into a buy position, we will need for the following conditions to be met. Firstly, we will need for both the candlestick and kernel line to be green, indicating that we are currently in an uptrend. Along with this, we will also need for the price to be trading above the kernel line, confirming the bullish market sentiment. Next, the Lorentzian Classification indicator should print a buy signal. This is indicated by the green envelope, which signifies that there is a high probability of an upward price movement. To confirm that the larger trend is also bullish, the RSI line should be above the middle line, which has a value of 50. When the RSI is above 50, it indicates that buyers are in control of the market, showing us that the greater market sentiment is indeed bullish. Once all the indicators are aligned, we can enter the position as soon as the candlestick on which the buy signal was provided closes. To manage risk, we will be placing the stop loss at the kernel line, which acts as a dynamic stop loss. However, if the kernel line is too close to the price action, the most recent swing low can be used as the stop loss instead. The take profit target is set at least 1.5 times the risk to reward ratio for 50% of the position, meaning that we want to at least make 1.5 times the stop loss. Once this target is reached, the stop loss is moved to break even, and we will exit with the remaining 50% of the position once the kernel line switches back to red. The break-even point means that we will no longer be risking any capital. We can see here that the take profit target was met. This means that we will now move the stop loss to break even and exit with 50% of the position. With the stop loss moved to break even, we will exit the position once the kernel line switches to red. As you can see, the kernel line switched to red here, meaning that we will now exit the position with the remaining 50%. To enter into a sell position, we will first need for both the candlestick and kernel line to be red, indicating that we are currently in a downtrend. Along with this, we will also need for the price to be trading below the kernel line. Secondly, we will need the Lorentzian Classification indicator to print a sell signal. We can see that this happened here because of the sell envelope. To confirm that the larger trend is also currently bearish, the RSI line will need to be trading below the middle line. This means that the RSI needs to have a value smaller than 50. As you can see, this is the case here. We will enter into the position as soon as the candlestick on which the sell signal was provided closes. We will be placing the stop loss at the kernel line, using it as a dynamic stop loss. However, if the kernel line is too close to the price action, we will be using the most recent swing high as the stop loss. For the take profit, we will be targeting at least a 1.5 times risk to reward ratio for 50% of the position. Once this target has been reached, we will move the stop loss to break even and exit with the rest once the kernel line switches back to green. As you can see here, the take profit has been met. This means that we can now move the stop loss to break even. We will now exit with the rest of the position once the kernel line switches trends. Here we see that the kernel line turned green. This means that we will exit the position here. I hope you enjoyed the video and learned something new about these new machine learning indicators. Keep in mind that the strategy is to showcase different ways of using the Lorentzian classification indicator. If you enjoyed the video, please leave a like and subscribe to the channel. If you have any questions, feel free to leave a comment.
Hey everyone, this is Justin, and this is another video on a completely free and open source script that I published recently on TradingView, titled Machine Learning Lorentzian Distance Classification. This script was featured recently as one of the editor's pick publications on the platform, and in the past few days it's actually been trending as the #1 script on the platform among all of the more recently published scripts. So because of this, it has been getting a lot of questions and requests for a video on this indicator. So I took some time to gather up all of these comments and messages I've been receiving, and I've tried to organize the questions from everyone into various categories that I think would be high impact for this video. So I'll try to touch on each of these categories from just a little bit of background and theory as to how and why this indicator works. Also, I'll be going through some basic optimization of this indicator, how to use it on lower time frames, for example, and also how to actually backtest it using the TradingView backtesting framework. So hopefully along the way, I'll also be able to address some of these clarifications. As always, I will segment out this video according to timestamp, so feel free to skip ahead if you're just interested in one of these sections. Now, as far as the actual machine learning algorithm is concerned, this is a type of machine learning known as supervised learning, and it relies very heavily on labeled data. And the type of supervised learning we're using here is a form of classification as opposed to regression, and specifically, we're using a nearest neighbors based classification algorithm. Now, the really cool thing about nearest neighbors, in my opinion, is that it is literally so dead simple compared to the other types of machine learning algorithms out there. You don't need to know any calculus or even linear algebra for that matter, or kernel tricks. You know, a lot of these deep learning methods these days require you to tune dozens of parameters and hyperparameters just to get something that's halfway decent, but nearest neighbors doesn't require any of that. In fact, it's really just so intuitive, you may have even done it by accident. Like anytime you've gone back and wondered what happened when the RSI was previously 71, and you just looked across history and narrowed in on these handful of points, out of really these hundreds and hundreds of points, you really only cared about a handful. Because those, in this case, are your nearest neighbors for this particular feature series. So that's an example of how you, as just a human looking at a chart, kind of naturally thinks about data in this fashion, in that really all you care about is a certain subset of your historical neighborhood, as you call it, in order to basically make a conclusion about where price action is going to be going. So you may be wondering, for something really so simple as a concept as just finding nearest neighbors, why do you even need an official algorithm at all? You know, isn't this just something you can eyeball? And really, there's nothing wrong with the approach of eyeballing as long as it's just one feature series that you're eyeballing it for. Where it starts to get quite challenging is when you start having other feature series in addition to this. Like, imagine if we threw a CCI graph up here and an ADX and a wave trend and a wave trend 3D, or another RSI of a different length, and you wanted to consider all of these things at the same time. That would be pretty hard. You would really need a more systematic way of determining similarity between two given points. So how would you go about doing that? Well, in mathematics, another way of measuring the similarity between 2 points is simply measuring the distance between 2 points. So I've created this distance algorithm viewer to help with visualizing these various distance algorithms. And specifically for this indicator, I want to focus on the Euclidean and Lorentzian distance algorithms. Now, the Euclidean distance algorithm, which is what you see here, is pretty intuitive for us, right? So this is the set of all possible historical points. And when you just focus on what is closest to us in Euclidean space, it appears to be a sphere. And for the most part, this works pretty well. I mean, there's a reason why it's the default a lot of times for these nearest neighbors type algorithms. And it actually works pretty well up until the point where you have some anomaly. So for example, on a time series, a financial time series, if all of a sudden you have a major world event happen, whether that's a black swan or an FOMC meeting or an FOMC meeting minutes, that is enough to really throw the Euclidean distance algorithm off. And the reason is, with enough critical mass, this behaves very similarly to how you might expect a very massive object in space-time to behave, in that it will actually start to warp the surrounding space-time. Except in this case, we could call it price time because it represents features that are basically describing your price. So the standard grid, gravity grid as I'll call it, would look like this, right? But the more significant this event is, the more buckling and warping you will see of the surrounding fabric of this continuum, of this price time continuum. And the warping will continue so much that basically space that you would envision as being far away is actually a lot closer than you might think. And suddenly, the Euclidean distance becomes utterly inadequate. It can't describe this very well, and the type of neighbors it's giving you are just totally off. And it isn't necessarily representative of what you would need under the conditions, the warped conditions of a very significant world event. So one way of getting around this, however, is by changing the distance formula. And I did a lot of research into just diving into the literature, seeing what type of distance algorithms were being used out there across various domains, not just the markets and finance world, but just general time series pure analysis, right? And one thing that really stuck out to me was how robust the Lorentzian distance metric was across a wide variety of time series datasets. That was very impressive for me. Almost always, regardless of the time series, it almost always outperformed Euclidean distance. And that's interesting because I suspect that in nature, this type of warping effect, regardless of whether it's space-time or price-time or whatever feature space you're in, I suspect that time series tend to have this warping quality about them. And I think that this is particularly relevant to the financial time series world. So if you look at the actual graphs, like this is another indicator that I've built here that shows you upcoming world events, right? So these orange lines show you FOMC minutes, for example. And FOMC minutes are always fascinating because you don't really know what mood the Fed will be in that day. They could just wake up and just be incredibly hawkish, trying to scare people into not getting too euphoric. And, leading up to this, the price could just be really ripping. And then something is said that just turns it around. And you tend to see this general pattern happen quite a bit to varying degrees, but, it's definitely there. Like you can see it happening. And in this case, Euclidean distance is just utterly inadequate. Like the nearest neighbors that may be, in this area right here, just tell you absolutely nothing about what's going to happen coming up next. And to me, that's just so cool because I think this is a great opportunity to change distance metrics whenever you get near to a major event like this. So what this will look like essentially is after you have enough mass added and there's enough buckling of the surrounding fabric of price time in this sense, the way you can kind of get around this is just by switching distance metrics altogether. So you can see that if you look at the red and the orange way out here, remember that's supposed to be close to you. These are technically closer in Lorentzian distance than these purples way in here, or these greens way over here. And that's just so weird to think about, but it actually has very profound ramifications. So for example, if I were to cut down the amount of neighbors being shown here, this is the Euclidean distance, and then boom, that's the Lorentzian distance. The nearest neighbors algorithm that this indicator is using only requires 8 neighbors to cast their vote, right? So in this one, these 8 neighbors will all be voting whether price is going to be going up or down for this guy. Now, these ones also get votes, but look at who we're asking. We're asking basically someone with a completely different RSI value in the past. But the thing is, it had a similar CCI and ADX value as us. And that's always the thing. By compensating with some of these other feature axes, you can actually have more flexibility along one of your principal axes, like this RSI value. So what that allows you to do, regardless of how you kind of view it, is it allows you to look back in time, and as long as CCI and ADX and your other features can basically align enough, it can give you some incredible amounts of flexibility here. And basically, it will allow you to consider like entirely new fractals that otherwise wouldn't have been picked up in the Euclidean space. So it's a very exciting way to combat the whole warping of price time. And that's really the main thing I wanted to get across. So with that background, I will now transition back over to the settings and show you how to optimize the indicator and also how to backtest it. Okay, so in this section, I'm going to go through the different settings, give you an idea hopefully of how to calibrate this indicator, regardless of what time frame you're on, whether it's a slow time frame or one of the faster time frames. The general principles should be the same. And then I want to show you how to actually perform a proper backtest on this indicator. So there are only a few different sections here. There are the general settings, which correspond to the settings that govern the entire indicator. The feature engineering section, where you can really get into the fine tuning of different features that you're using for your model. You could adjust the feature count itself by this toggle right here. Sometimes this can be surprisingly useful. I always recommend, if you're trying to calibrate to a newer time frame, like a fast time frame, and you're trying to figure out what features to use, or maybe you suspect that there's some better combination that I don't have here, I would recommend always starting off at 2 features, and then usually RSI and wavetrend make a pretty dynamic duo, but you could even make it even more simple, less moving parts, and just like start off with just a pure RSI indicator. So this is the same thing as just being based off of pure RSI. And then you can kind of see how other indicators, as you gradually expand out to include CCI with a length of 20, how that would affect it, so on and so forth. So that's the kind of general process I would take. Always start off small and then move out from there. So that's the feature engineering section. It can be useful for any time frame. The filter section is, you can kind of think of it as like your post-processing section. So I just reset everything back to defaults here. But as you can see, volatility filter is usually a good one to always have. It just prevents some whipsaw from happening, especially during these choppy ranging markets. The regime filter is an interesting one. Basically, what it will do is make sure that you only enter as the market is transitioning from ranging into a trending market. So the more you go towards 1.0, the less signals you will see, because the more strict it is about only entering at certain times. So you can see how it took away some signals there. But if I go the other direction, -1, it actually becomes super lenient. Like, it'll allow you to enter during ranging markets, trending markets, it doesn't care. So the happy medium is usually somewhere in between, which is where the default is. I usually like it a little bit slanted to -1, just because I like to see options. But if you want to see less signals, especially for you guys in the lower time frames, it's important to jack this value up so that you have less signals polluting your interface here. So that's what the regime filter is. Typically, you want to use regime or ADX, but not both. They usually don't play well, because they're both kind of related to trend. So if you're filtering on the regime, it doesn't really make sense to be filtering on ADX sometimes. But it'll be surprising, depending on what time frame you're on, how effective ADX can be sometimes. So it's always worth taking a look at. But very rarely would you ever want these together. It doesn't make a whole lot of sense. And these two are always nice to have. I mean, this is for ensuring that you're going with the trend. So this default is, I guess, for 200, but you can adjust that as you see fit. And that will ensure that you're only shorting in bear markets and going long in bull markets. And especially at lower time frames, this is almost a necessity. You don't want to be going contra trend a lot if you're trading on like 5 minutes, 1 minute. So I think that was it actually for the filters. The kernel settings are interesting because this is like an extension of the filters, I would say. You can basically disable trade with kernel. Trade with kernel is kind of like trade with trend, in the sense that it will just try to make its entries in line with the color changes, right? So the kernel itself, a lot of people think it's like a moving average, but it's actually a lot better than that. You could change the relative weighting, for example, to be 0.1, and this sometimes gives you a smoother fit overall. You can see it did boost the win rate a little bit over here. So that's always an interesting trick that you could try. Of course, moving the look back window will also result in a tighter fit, like you would expect, but the regression level is like unparalleled in terms of how tightly you can fit it to a curve, and you will really be able to start to see harmonic patterns that you wouldn't be able to see otherwise. Like over here, you can kind of see a head and shoulders pattern forming, and that's pretty hard to get if you're just using moving averages. Maybe if you're using like a Eurex moving average or a Kaufman, but yeah, kernels are pretty awesome. You could also slap on a whole nother kernel here using my Nadaria Watson indicator, and this kind of adds like a whole other level of confluence whenever they cross over, you know, it's kind of going bearish and vice versa. So that's a useful trick that you can do. Now for actually backtesting it, this was not meant to be a backtesting framework initially, but I did add in an option to kind of force this into I guess a mode that matches more closely the native backtester. And the way you can actually get this to work is if you set up a backtest adapter here, like I have. Mainly these lines are probably the most important because it's what translates the actual integers over to your start and stop conditions. What you will do is basically load up your backtest adapter and then specify your source. By default, it will be close, but you want to select backtest stream, okay? And that backtest stream will basically open up the whole realm of possibilities.
Even though many strategies based on or generated by AI have been popping up, these
That's right, guys. In this video, you will learn how to convert an indicator into a strategy using AI. Finally, this is the method that will help millions of people to do that. And after my last video where I took the top 5 indicators, I converted them into strategies while coding, I did it myself. You guys asked me, okay, Michael, that's all great. You showed us that the indicators that we're using are not all so great and we should use strategies, but how to freaking create strategies, especially when I have an indicator, it looks great, how to convert it into a strategy. Well, that's why I'm making this video, because I wanted to help you and I found the method, guys. Okay, I found the right AI, the right prompt that you can use to make this happen. And in this video, I'm going to show you all of that. This video will be less cutting and more raw because I want you to also see the problems that can happen and how to solve them. There are not a lot of problems, but a couple of them might happen, and I want to show you how I do it in real time without cutting out all of those errors, right? So guys, if you love that, make sure to destroy the like button, okay? Massage it, cuddle it, love the like button, just click on it, because I am making these videos to change your life, to give you game-changing educational content on this channel. While this is not financial advice, crypto is risky, you can lose all of your money, but that is why you subscribe to this channel, you watch the videos that I make, because that increases your chances of success, guys, right? That's the whole point. We have to be better than other people because it's a player versus player game. So let's get into this video. Let's learn how to create a strategy from an indicator with AI. It's gonna be awesome. Let's get started. I'm very excited to show you this, guys, because it makes you independent and gives you so much power, guys, right? You can turn any indicator into a strategy and you can create even completely new strategies. You can combine different indicators into a strong strategy. But let's get step by step into this topic, right? First of all, we're going to convert 3 indicators into strategies using OpenAI. And let me show you which OpenAI we're going to use, because you have to use the right one. So you have to use ChatGPT o1 Preview. That is the one that gives the best results, and that's why I'm so excited about this method, right? I have had a couple of conversations. As you can see here, we have the bull market support band conversation, super trend, and Bollinger Band, and the results that I got, guys, are incredible. Okay, so this is my version of the strategy, right? Producing 736% profit with these other KPIs. And when I turn on the GPT version of that strategy, turning it on now, you can see the exact same results. Okay, that is fascinating. The next thing is the super trend strategy, my version, right? With 530% profit, and GPT version, 530% profit. Exactly the same. Yes, it's a lot of stuff in the chart, but just to show you that this AI version that we're using here to create strategies produces very good results. And I want to show you how to do it yourself right now. All right, guys, let's start with the bull market support band. This is an indicator that you have seen in my previous video that looks like it's actually quite nice, because whenever the lines cross, right, to the upside, there might be a good buy signal. And then when they cross to the downside, it might be a good sell signal. So let's convert this idea into an actual strategy, right? So first of all, bull market support band, let's add it to the chart. Click on indicators, search for bull market support band, and click on this one. You will have it on your chart. It will look the same as mine. Now, the next thing you need to do is you need to hover with the mouse over this indicator here and click on the source code, because you need the code to give it to ChatGPT, right? To convert it into code, into a strategy. So click on that, and here you get the code of that indicator. Just copy it, right? Just copy it as it is. and go here to the prompt, which is below this video, copy paste the prompt and everything. And in this prompt, you have 3 sections. And before I put the code, let me explain the sections. The first section is basically telling ChatGPT what we want from it. And also we're giving it a good confidence saying, hey, you are a professional PineScript version 5 developer, right? So that it does the right thing for us. The second section is giving it instructions on how to behave in certain situations, which settings to use per default. So I have put this together carefully so that we avoid the common issues. And the third section is the code of the indicator, right? So I'm telling it, hey, this is the code, and here I paste the code, right? And that's it. You don't have to change anything else. Now copy the whole thing, right? And now go to ChatGPT and open a new chat and make sure you are on the 01 preview version. That's the only one that actually makes sense. And just paste the whole thing, and let's give it the first try and see what happens. Now what will happen here is that it is thinking. You see that it's not immediately answering because the 01 preview version is a better version that is actually thinking about its actions before giving a response, which is professional, right? So that has resulted in amazing results for the strategy creation. And after like 40 seconds, 60 seconds, something like that, it gives the first version of the strategy. So usually there are tiny issues in there, but they're very, very easy to fix. I will show you exactly how to do that after we get our first version. All right, after 49 seconds, it gives us the first version. Let's copy the code without even looking at it, and let's create the strategy. Back in TradingView, right, you see here that you cannot edit this because you need to create a working copy. That's perfect. So click on create a working copy, right? Click on that. You get a new script with no title at all. Just delete everything inside and put the code from ChatGPT here, right? And then click save. Click save again, and let's see what happens. Is there any error? No, no error so far. If there was an error, I would show you how to fix it, but I'm sure it's going to happen in the next indicator. Now, the next thing you need to do is you need to add it to the chart, and let's make sure I am not in the way. No, I'm not in the way. That's good. So add to the chart. So now you need to click this button to add this strategy to your chart to start seeing the results. All right. So we have added it to the chart. And as you can see here, it produces, well, quite good results. Not exactly the same as mine. So mine was, let me open it right now. Mine was 736% profit, while this one is 383% profit. But hey, still not bad. But now I want to create the same result as my strategy. But how can you do it, right? How can you double check if it's actually done the right thing or not? Well, it kind of depends on you as well, because when you look at the indicator, then you have to make sure that these buying and selling arrows, right, that you see here, that they're happening at the same time as when you would buy and sell based on the indicator. So now you have to use your own mind and come up with something that you would be doing as well. Now, as you can see here, there is a cross to the downside, and after the cross, there is a sell signal, should be a sell signal, right? Now, when I turn on the strategy again, we can see that it is selling, but it's a bit later. Let me double check here if that is the case. Yeah, so it should sell here, right? Because this is the cross of the indicator, but it sells way later. So for me, that looks like it's selling when it goes below the line instead of selling when there is a cross. Let's see. Let's go back to the ChatGPT version and let's tell it that we want to buy when there is a cross to the upside of these two EMAs, and then we want to sell when there is a cross to the downside. Let me formulate a sentence and come back to you. Okay, so I'm telling it to buy when EMAs cross to the upside and sell when EMAs cross to the downside. And I don't know if you noticed, but there are these strange staircases that happens because the strategy is actually going to the 1 week chart to get the numbers on the prices and then creates the results on the 1 day chart. Long story, but if you don't do fill gaps, then it will look like that. So I am telling it, and I told it already, by the way, to fill the gaps, but you know, sometimes it doesn't stick to all the rules that I give it. It says here, fill gaps, right? So it didn't do that, so I will tell it to do that now. Okay, so I'm saying also fill gaps to avoid jumps in the lines, So let's click enter and see what happens. Okay, we have a new version. Let's see if that works out. So we have here gaps off. That's not really smart, right? Because yeah, that's the whole point of filling gaps. So they should be on, but okay, like it's not the end of the world. And so let's copy this code and go back to ChatGPT. And by the way, if you want to make sure you're editing the right code of your strategy, then click on these source code brackets and you'll arrive back in your own code. You just delete everything in there, put the new code, click save, and then see what happens. Okay, it didn't fill gaps, but let's see about the profit results. And now it looks like it has the same exact outcome. Yes, it has the same exact outcome as my strategy. So there you go, guys. We have managed to convert an indicator into a strategy, and it does exactly the same as I would do, right? So doesn't get much better than that. Yeah. I hope you learn how to do it. Now, let's go to the next one and do it there as well, because I want to show you as well a situation where there is an error in the code and how to fix that. Okay, guys, the next strategy that we want to create is from the Bollinger Bands. And the reason is that simply it's the best one from my previous video. It makes the most profit. So I think it makes sense for you guys to know how to do exactly that one. And so first of all, you have to add the Bollinger Bands to your chart, go to indicators, search for Bollinger Band and click on the technicals, right? This is the Bollinger Band indicator that you want to add to your chart. Click on that and then you see exactly the same as I do. We are still on the Bitcoin one-day index chart, guys, right? And now, again, you need to use your brain a little bit to zoom into the chart and understand, okay, when would I buy, right? Because again, it's an indicator. It doesn't have buy and sell signals, right? So when would I buy and when would I sell? And to make it faster in this video, because I already explained it in the previous video, I would buy when the price goes above the upper band, okay, and then stay in the trade for as long as the price goes below the lower band, right? So quite long, and then it would sell here, right? So that would have been a very nice trade, buying here and selling roughly here, making 356% profit. So let's see if that idea leads to a lot of profit in general, because sure, nice that it worked here, but does it produce false signals? Does it have a high drawdown? All of this stuff. Okay, the same as before, we go here with the mouse, we click on the source code. I will make this larger. I will just copy the whole indicator. I will go to our prompt and I will make sure to delete the previous code here and put the new code, right? Copy the whole thing again, go to ChatGPT, open a new chat, make sure you are on the O1 preview and put the whole prompt in there, click enter and get a coffee while it is thinking. Man, it's thinking for a long time. What's happening? Okay, 41 seconds. I don't have any patience, guys. Okay, anyway, so this is nice. Let's see if it works. But for sure, we're going to have to tell it one more time when to buy, when to sell, because we just told it, hey, convert it to a strategy. And it made up its own mind when to buy, when to sell. You can see here the long condition has something to do with the date range. That's fine. But also it has to do with the crossover. But let's see if it does the right thing. Just copy the code, create a working copy, click on this blue text here, right? Just delete what is in there, put the code from GPT, click save again, and now let's hope that there are no coding errors. Okay, no coding errors there, that's nice. And now again, click on add to chart, okay? This one here. Okay, we have it on the chart and well, it doesn't make money, right? It's actually losing money. But that's because most likely it would just do the wrong thing. So we have to tell it when to buy and when to sell. But the first thing that we should be doing is checking if when we turn off the strategy and we turn it on again, if, you know, the Bollinger Bands, they overlap each other, right? So that is the case, which is very nice. That means that it turned the indicator into a strategy. So that's cool. But then it doesn't know when to buy and when to sell properly, right? So it buys here and then it sells, like whatever. Okay, we want to do other things. So now I have to formulate a sentence where I tell it that when the close price goes above the upper band, buy, right? And when the close price goes below the lower band, sell, which is definitely not doing right now. You see, it does something totally different, okay? So go back to GPT and let me formulate that sentence and come back to you. Okay, so I'm saying thanks. You always have to say thanks, okay? You get better results like this. Yes, be friendly, guys, right? Even to the AI. You never know when the AI will be in the form of a robot in front of you and you can say, I was always nice to you. Please take care of me, treat me nicely as well. Okay, I'm just saying. Okay, so thanks, but now change the buy condition to buy when the close price is above the upper band and sell when the close price is below the lower band, right? And so guys, keep in mind that you have to necessarily have some plan, okay? You cannot just hope that there will be the best strategy on the planet coming to you for free, right? You have to think a little bit. So you have to go to the chart, zoom in and think, when would you buy, when would you sell? And just tell it to the GPT, right? And then it will create a strategy. So that's the thing, right? When you create a strategy from an indicator, you have to define when to buy and when to sell exactly, right? Not just an indicator. An indicator always looks great with the eyes, but then when you actually trade it, it's not so good. That's why I'm making these videos, guys, to show you how it's done and how to evaluate this stuff, okay? Okay, 16 seconds, not a lot of time. So it was quite fast. Let's just copy this and hope that it did the right thing. And again, let me click on these source code brackets just to be sure I'm editing the right thing. Delete the whole thing, put the new code, click save, and let's hope we have better results this time. So this time, wow, it looks very nice. 1,187% profit, right? So way better. But before we compare with mine, let's just zoom in and see if it did the right thing. So you see, it is buying when, because this closed above the line very slightly. So it bought on the next candle, right? So that's nice. And then here you can go and see that it actually sold when the candle closes. So it sells on the next candle, the first second, right? That's why this candle closed below, boom, the next candle is a sell signal, right? And that's, by the way, best practice. You should only act on candle close, because otherwise you get faked into a trade or out of a trade, right? So if we now activate my strategy, which is, let me zoom out to find it, it's here. This one, you can see it's exactly the same net profit, exactly the same drawdown, everything is same. So guys, there you freaking go, guys. We converted two indicators into strategies, got to the same result as before. And we still don't have coding errors. So I'm guessing I have to go to do one more strategy for you as a bonus. We're gonna do the super trend as well next. Let's go. Okay, guys, this is the super trend indicator. Click on indicators, search for super trend, and in the technicals, click on super trend, okay? Yes, there is a strategy, but the whole point of this video is to show you how to convert any indicator into a strategy. Okay, click on super trend, and then you will see pretty much the same. You see the same as I do, right? So when would you buy and when would you sell? You have to always ask yourself that question before creating the strategy. So I want to buy when it's green, and I want to sell when it's red, okay? Like, very simple, right? And so I don't know yet how to tell it to GPT. We'll figure this out, but that's what I would do here, right? So yeah, there will be a lot of fake trades, as you can see here. So buying here, selling here. So here you lose money, right? Here you almost, like, you lose a little bit of money here, right? So you will see, guys. So first of all, like always, we go to the source code and we copy the whole source code, and we go to our prompt. We delete the previous code that we had. We put the new code. We copy the whole prompt, and we start a new conversation in GPT. Make sure, again, O1 preview, not anyone else, any other version, it wouldn't work. Okay, click enter, and let's wait for the first result. Of course, like I said, we have to still tell it when to buy and when to sell, but let's see, maybe it does it correctly in the first try. Okay, after 43 seconds, we get our first version, and let's see how that performs on the chart. Copy the code, right? And go here, click on create working copy, delete everything, put the new code, click save again, and no coding. Oh, coding errors, perfect, because, well, we wanted to have this issue, right? So that I can show you how to fix it. So you just copy this error, right? You copy this error, right? And you make sure to tell it that it's in line 26, okay? So let's go back and say, in line 26, we have this error, right? Put it there, click enter, and now it will fix it, hopefully. Let's see. What I've also seen often is that when I start a chat and it goes in the wrong direction and I can't make it work, then it's simply better to just start a completely new chat from the scratch, the same prompt, okay? And then it will result into something useful. That's crazy, but that's what it is, right? So sometimes it just goes the wrong direction and it will never come back to do the right thing. But hey, that's fine. Again, it's very easy to do that, right? So when you do this, right, a couple of times you get errors, you never get out of the errors, then just start a new chat. Okay, so I have a new code. I put it here, save. Seems to work. Great. Click on add to chart, right? As always, we're going to get a back test. And the backtest, yeah, it's pretty bad, but let's first see if the indicator, right, the coloring is correct, okay? So you always have to do that, right? So, by the way, let's close this and just close and open the indicator and see if they have done, if the basically GPT has found the right trend and is doing the right thing. As you can see, it's a bit funny because it's actually buying when the trend is red and it's selling when the trend is green. So, well, that's stupid, right? It has to do exactly the opposite. So I go back to ChatGPT and I'm telling it to switch around the buying and selling. As you can see, the sentence is, okay, but now buy when the trend is green and sell when the trend is red. Exactly the opposite of what you were doing. And let's see what happens. Okay, guys, after 31 seconds, we have a new code. Let's copy it here and let's make sure we're editing the right indicator, the right strategy actually. Click on this and let's copy, well, not copy, but delete everything. Put the new code, click save, and let's see if now it is doing the right thing. Let's see the strategy tester. So now it makes money. So that's already way better than before, right? And let's zoom in and see if it does the right thing when we look with our own eyes, right? So it's green, it's buying, it's red, it's selling, green is buying, red is selling. Yeah, looks great, right? So let's look at the result again. We have a drawdown of 47. You know all of that from the previous video. But let's also check if it has the same profit as my version, right? Okay, so that was the super trend strategy. This is my super trend strategy. As you can see, the results are exactly the same, guys, right? So now you have seen all the cases that can happen, right? We had a coding error. We just told it in which line is it. Tell it the line, otherwise it's a bit confused. And it fixed it itself. Then also we told it when to buy, when to sell, and it did that as well. Now, if you are super cool, right? Because that's very easy, right? To convert indicators into strategies. You can say you want multiple indicators, right? To be combined into a strategy. But that is a bit more advanced, and I might make a video if I get enough likes on this video. If I get above 100 likes, I will make that video as well, guys. You see, guys, it is very easy to do if you're using this method. We went through all of the issues that you can have. There are not so many because it's actually a very easy method, right? The only thing you need to do is you have to have a subscription for the ChatGPT version that I mentioned. But once you have that, you are fully free to create any kind of strategy from an indicator that you want. Gone are the times where you have to ask me to create a strategy from an indicator. Now you can do it yourself and more, guys, right? You can go bananas with this, right? You can create your own strategies. And by the way, once you have a strategy and you want to fully automate it, then head over to signum.money. As you know, this is my software for automating any TradingView strategy whatsoever without having to put anything special in the code. You just create the strategy normally, and then you can automate it with Signum to buy and sell for you fully automatically on your exchange. I do that. You can do the same. It's very easy. And with all of that in mind, in order to learn how to automate a trading strategy, this is the next video you should watch.
It's TradingView. Ooh yeah. Ooh yeah. Strategies, we know what to do. Yeah. Ooh yeah. Yeah. Stop loss is set. Watch the bars rise and fall.
That's right, guys. There is a new AI in town and it's called DeepSeek R1. Okay, and it's a free AI. Everyone is going bananas about it, including me, because the question that I have is it good for creating trading strategies? Because that's what we are all about on this channel, right? Creating, improving, and automating trading strategies. And as you know, I have a test suite with easy, medium, and hard challenges for creating trading strategies for the AI. Okay, we already tested many of them. And we're always going to continue testing the newest ones, which is this one, right? So is it better than the rest? Is it better than ChatGPT, than Gemini, than Claude, and all these other guys, right? Listen, the thing is, it's free, okay? And if it's free, it can help a lot of people, it has the potential to help a lot of people, but only if it actually gives good results. Otherwise, it's a waste of time, right? So I invested my time to figure out if this AI is any good for trade automation strategies, and the results are in this video, okay? We're going to run the prompt. You have full access to the prompts, by the way. Check this out. There is a document that you can open right now. There is a link down below to a Google Sheet, not a Google Sheet, a Google document. And you have all the prompts and all the code that all of these AIs have created. That's even better because then you can actually take the code and try it yourself. And that's basically your basis for building a trading strategy, right? For improving it even. So with all of that in mind, remember, this is not financial advice. Crypto is risky. You can lose all of your money, okay? But that's why you subscribe to this channel, you like the videos, you massage actually the like button because I need a good massage. So give it a good massage, all right? And also you watch the Algo Trading Knowledge playlist, which is actually a free course on algo trading, creating strategies using AI, automation. It's like You will see, it's amazing. It's, in my opinion, life-changing. So, with all of that in mind, let's see how to create trading strategies with DeepSeek, how to fix potential issues that happen along the way, how to put the strategy in TradingView, and also what the results are. Are they good or bad? Is it any good for trading strategies? Let's check it out. Okay, guys, let's get into this. This is super exciting, right? Also for me, because AI is making steps very, very quickly. This is a free AI, and I'm quite excited about the results. Remember, we have a test suite. We're not just winging this. We have a process of testing these AIs if they're any good for creating trading strategies, right? So the easy difficulty is to take an indicator and convert it into a strategy by giving it exactly when to buy, when to sell based on the indicator, right? So we have DeepSeek R1 and we will find out if it was any good, if it managed this challenge. Then the medium difficulty is to take a strategy that already exists and improve it by adding another indicator to it. Now, this is harder, right? Because there is code already. It has to add new code to it and make the strategy better. We tell it how to add the indicator, right? But we want it to do it, right? So this is harder. Let's see how it performed over there as well. And for the hard difficulty, it's very hard. We give it the prompt to create a completely new trading strategy from the scratch. We don't give it any code. It has to figure it all out itself. And because this is so hard, we have two different versions of this, right? We have the version where we give it less input and the version where we give it more input to make its life a bit easier. The funny thing is that more input is not always better, but you will see, right? You will see that here in the video. And again, let's see how well it performed. Was it actually better than O1, which is a paid model? And definitely important, was it better than Gemini 1.5 Pro? Because that thing is free, right? Gemini is free, okay? So if this is better, then it's free and better, no? It's perfect. So we want to figure this out. We want to figure out if it actually made even better profits than the other ones. Ultra exciting stuff. And let's get started with the easy difficulty. And you will see how I do it, right? You will see the result. We're going to check it out together in real time. Well, I will speed up some of the thing because otherwise it takes forever. Let's get started. All right, let's go to our test document, right? This is the document that has all the prompts, and this is what I use to test the AIs, right? So we can actually compare them with each other. So the easy prompt here, you can just take it and copy paste it. You will have access to view only, right? You cannot edit, but you don't need to edit anyway, right? You just need to copy paste it, and you can edit in your own editor, okay? And keep in mind again that we have the full result of the O1 code that it produced using this prompt, Claude, Horizon, and so on, right? And we're going to add DeepSeek now together, right? So you see this in real time. So I will copy this, right? And this is basically a prompt where what do you need to change here? Well, you need to change only the indicator, right? So this is the stuff. Actually, let me make it red here so you remember that this is what you change. And you also change this because you tell him when to buy and when to sell. But everything else, he does itself, right? So it's the easy prompt because you give it more input and you give it what you want it to do. It's just doing it for you, right? So it's a developer as an AI, right? Okay, so we copy this, right? Just copy the whole thing. And you go to DeepSeek. By the way, you go to the website, you click on Start Now, and then you click on Create New Chat. You make sure to click on Deep Think because otherwise it's not thinking long enough to give you proper answer. And you just paste the whole prompt, okay? And just do it, okay? So this is something that you do to figure out how this whole thing works, right? Of course, then you take it and you make your own strategy, okay? But first, take this prompt, right? Or the prompts I show you in this video to learn the process and to get to the same result. And then you get the confidence to continue and build your own, okay? So as you can see here, it tells me what it's thinking about, right? I'm not going to read this stuff, right? But it's cool. Like you can check it, right? It makes its own reasoning about how to build the whole thing. And then we get the result and we can copy it into TradingView. I will show you how to copy that code, put it in a strategy, add it to the chart. It's very easy to do. And well, I will speed this up until we get the code. What is happening, mate? Hopefully this result is good, right? If I wait that long, okay, I want a good result. The code is coming. Yeah. This is a Bollinger Band strategy. Doesn't matter. The thing I want is that it creates the same output, right? The same profit and drawdown like the other AIs, right? Because that's how you compare if it does the right thing. Okay, so I copy the code, right? I just click here, copy, okay. Then I go to TradingView, and in TradingView, I basically, let's delete this, right? And in TradingView, I go here to Pine Script, and here I click on this arrow and create new strategy, okay? So it's completely new. Delete everything that you have here and paste the whole code in there and click save, all right? And then it will ask you whatever, yeah, click save. And we don't have any coding errors, which is awesome because that would be bad. And then click here on add to chart. Let me see if I'm on, yeah, I'm definitely in the way. So here, click add to chart, okay? And once you have done that, you can see the numbers, and I'm in the way again. So let me put me in the other corner. So here you see the net profit is this, the max drawdown is this, and so on. I already know that this is correct, okay? Those are the numbers that we also get from the other AIs. Now, let me show you what I mean by that, right? So here you can see I already have that here, right? Because I did that before, but it's the same exact result I got 3 times in a row without changing code. It works perfectly fine. So those are exactly the results. And when you go here to, for example, the Gemini, it's also the same exact result. You go to the other ones, they're all the same, right? So here exactly this is, I think, the Claude one. It gave me exactly the same results. And O1, of course, is awesome, but it's a paid model, right? So that's why. So all of them give the same result. So I would say that DeepSeek manages the easy difficulty prompt. I mean, that's cool, right? All the other guys manage that as well, so that's not a big surprise, okay? Let's go to the medium one, and for that, we go back here. And okay, before that, let me actually paste the whole code here because I want you to have access to the resulting code of this strategy, okay? So where was it? Here, copy this and put it here, right? This is the result, and maybe close it so that it's not taking so much space. Okay, so that's the thing, right? Then we go to the medium prompt. So you need to give it the indicator that you want to add to an existing strategy. Let me make this red as well. So that's what you need to change, right? Then you need to tell it when to buy and when to sell and so on. And you need to give him the whole code of the existing strategy. In this case, it's the Gaussian channel strategy, right? Hint, hint, if you want the code for that, this is the code for that, right? So I'm gonna make it red as well because I just want to, I forgot to do that before in the other video. These are the parts you need to change, okay? The red parts, right? You can also change here, but just, you know, have fun with it, right? This is to be creative, right? This is the whole point of this, is that you're fully free to create your own thing, right? Okay, that's right, guys. In this video, you will learn how.
Even though many strategies based on or generated by
Today we will be testing the Machine Learning Logistic Regression Indicator. Before we do, if you have not watched the first videos on the channel and the videos after that, you need to go do that now. Here at the Academy of Forex, we are building the best trading system possible as a team. You can find a link down below to sign up for TradingView. If you use that link, you'll save a little bit of money on your account. You can also find a link below to join us on Discord. If you are interested in a full list of all the indicators and strategies that we have tested along with their win rates, you can sign up for our Patreon. And you will receive a full list of all the indicators and strategies that we have tested. You can find a link to our Patreon down below in the description. We also have a Patreon-only exclusive Discord channel where we will give you a list of winning indicators, a list of winning strategies, post trade ideas, give advanced advice, and much more. So click the link below to join our Patreon. Before we do though, I wanted to put the testing scoreboard up for everyone to see. So to date, we have tested a total of 102 different strategies, with 30 of them being winners. The best one so far was able to achieve an 84% win rate. That is the Academy of Forex indicator with the Z-score probability indicator. I'll put a thumbnail of that up on screen right now, and I will also link to it at the end of this video with that same thumbnail. That way you can go straight to that video and watch it on the best strategy that we have tested so far. We've also tested a total of 960 indicators, with 402 of them being winners. The best ones so far were able to achieve a 100% win rate. Now you need to go back and watch those videos to understand the context of how they were able to achieve that. So go back and watch those videos and see what you can get out of those winning indicators. We've also retested in the advanced testing 110 of the winning indicators. 39 of them have been able to maintain the winning status, the best 2, a 76% win rate. And keep in mind that we test most of these indicators and strategies on the Forex and crypto market, but they can be applied to just about any market and time frame universally. Okay, so today we are testing the machine learning logistic regression indicator, and you can see it here on screen. And so the source video says that this is the best AI powered buy sell trading view indicator. And so the indicator itself, you can see here has these tags here, these blue tags and pink, burgundy, whatever you want to call them, the pinkish red colored tags. And so we have the blue ones and the pinkish ones there. And so the blue tags are going to be buy signals and the pinkish tags are going to be sell signals. And so we haven't changed any of the settings other than to go in and turn off the show info, which just has a little panel here at the front of price action, just kind of showing the accuracy of what it was up to this point on the number of trades that it looked back on. And so other than that, like I said, everything else is on default. So when we get a blue signal, blue tag, we are going to go long. When we get a purplish pink tag, we are going to go short. So that's how we're going to test it today. Let's go ahead and get on with the testing and see what we can get out of it. Alright, so we have some rapid fire action here. So the first signal that we picked up was a short signal, and immediately on the next candle we flip back to a long, stopping us out on that short. And then a few candles later, as we make a push to the downside, we then flip from the long to a short, stopping us out on that long. And then same deal a few candles later, as we make a push to the upside, we then flip back to a long signal, stopping us out on that short. And that long signal does make a nice push to the upside, finally getting us to a take profit. Let's go ahead and continue on. Alright, so we then pick up a short signal right here. It pretty much goes into consolidation, and then a few candles later, we then pick up the buy signal right here. We get enough of a push to the upside here to get us to our take profit. So what we're going to do now is just go ahead and fast forward through the rest of the testing. That way things don't get too long, and we'll pick this up when we're at the end of the year. Alright, so that puts us at the end of the testing right there. Before we take a look at what this was able to achieve, if you are looking for a profitable trading strategy, I highly suggest you check out the best strategy that we have tested on the channel here. It was able to achieve an 84% win rate. I'll put a screenshot up of the thumbnail to that video right now. I'll link to it up in the corner, and I'll also link to it at the end of this video with that same thumbnail. Like I said, it is a highly profitable trading strategy, was able to achieve an 84% win rate. It uses one of our custom indicators that we've developed here on the channel, as well as a trading view indicator, and all around it is a wonderful trading strategy. I highly recommend you check that out. And so there is a lot of benefits to becoming a patron of the channel. I highly recommend it. Alright, so let's go ahead and take a look at our indicator here. Let's get a scroll back here. So we've got quite a few trades within the 1 year's time, so we can't complain too much about the number of trades. Maybe can't complain. Depends. It definitely looks like it's nearing the over trading status at this point, but it did start to pick up some decent amount of wins. Surprisingly, the first 4 or 5 trades there were looking kind of grim, but then we got on this nice little win streak right here, which kind of gave me a little bit of hope that maybe this is going to turn out okay. So let's go ahead and count this out and see what we have. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, and 40. So we have 40 trades altogether in the 1 year's time. Like I said, that is definitely nearing that over trade status. But let's go ahead and count out these winners and see what we have. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, and 18. 18 winning trades. So that is not going to meet the 60% criteria that we are looking for. And so a little bit less than 50% on the win rate there. And so, like I said, definitely an over trader. Anytime we get an indicator that gives us over 30 trades in 1 year's time, it always seems like it can't do so accurately. And so that's a pretty good indicator. If it's over the 25 to 30 trades in the 1 year's time, it usually doesn't turn out too great. And so this one is definitely not the best AI powered buy sell indicator that you can use. We actually tested one not too long ago.
I'm going to show you a trading strategy that uses machine learning to make you money. Let's get straight into it. First things first, let's set up TradingView to make you money. Click on Indicators. To find this amazing AI trading strategy, we will need to type in machine learning. Add this one to your chart. This indicator uses machine learning to understand price movement of historical data to predict future movements on each pair, and adds a number value to each candle. Not every move is perfect, but this is why we will improve it using 2 other indicators. Tell you about today's sponsor, Trader Edge. Trader Edge is a website that allows you to track your trades, backtest strategies, calculate position sizes, and so much more. Thousands of traders are using Trader Edge to get an edge on the competition. The backtester section allows you to easily track backtesting progress, and it provides a ton of important data. I use this to backtest all of the strategies shared on the channel. Trader Edge also provides indicators and strategies that you can start using today to become a profitable trader. On top of all this, Trader Edge is also giving you a step-by-step guide on backtesting worth $100. You'll also receive a full course on how to build a profitable, mechanical trading strategy which has a value of $240. Now they'll even throw in 4 pre-made, high-quality strategies that are worth $100 alone. That's $470 worth of bonuses absolutely free. And they offer a 7-day free trial so you can try it out today completely risk-free. Make sure you click the link in the description to claim your bonuses now. This time you'll want to type in EMA, and we will use this as one of the confirmations for trend. Ensure you've all used these before. Open the EMA settings and change the length from 9 to 200. You can also make the EMA line a bit thicker so it is easier to see. Next, we will want to add the final indicator. Click on Indicators and type in Trend Alert. Select this one here and add it to your chart. Okay, so now that you have added all 3 indicators, your chart should look like this. Let's get into how we can take trades. Let's start with sells. You can see at the bottom of the screen the Trend Alert indicator was green, but it has now changed to red. This indicates a downtrend, and we should only look for sells during this time. First thing we want to look for is a sell label paint. This red label signals a sell trade. Our second confluence for this strategy is the 200 EMA. For a sell, price must be below the 200 line and the candle must be closed. And finally the trend alert is red, so this is a valid trade to enter. We will enter at the close of this candle here. For sells we will be setting out stop loss at the red line here, the indicator has default settings. And finally we will be targeting a 3 risk to reward ratio. You can see after a few candles this would have hit the take profit target. Moving on, we can see a buy signal, but that isn't valid, then we have another sell which is valid, so we'll enter here. We'll be entering at the candle close and setting the stop loss to the red line again. As you can see our 3 risk to reward would have hit again. Shortly after we can see another red signal paint, but it's pretty clear price wouldn't have reached the profit target on this trade. No problem though, we'll take the 1% loss. We are still 5% up from 3 trades, which is pretty amazing. Let's cross this off and move on. As you can see the next signal was a buy, but this isn't valid. Price has now changed direction, so we will only be looking for buy trades. This buy here is valid because price is above the 200 EMA and we have a green trend alert. We will now be setting the stop loss to the green line. We will still target 3% profit. This was another lovely example and hit our take profit. Moving on, we had a sell signal paint, but it wasn't valid, then after another buy. Set a long position at the close of the candle and again, set the stop loss to the green line. I'm sure you can start to see how the setup works, and during this time in the market it worked very well. This section alone could have passed your funded account if you were smart about it. There is another take profit hit. Even the next 2 trades after this would have both hit your profit targets, achieving another 6% on top. Okay, so now that you have seen how the strategy works and the kind of profits that can be made, let's backtest it and show the results from 100 trades. Please click that subscribe button if you're liking this strategy. Okay, so I have now backtested this strategy and you can clearly see how impressive the results are. We went for a profit target of 3% and risked 1% per trade. We also started with a balance of $5,000, as that is the smallest prop firm funded account you can get with my Forex funds. But we managed to turn $5,000 into $24,000, which is absolutely crazy. Thank you for watching the video. If you enjoyed, please click this one right here or consider subscribing.
That's right, guys. In this video, I'm gonna solve all of your TradingView issues. We have a very large community of over 4,500 people in Telegram, and of course, over 70,000 on YouTube. Oh my God, it's crazy. And you have a lot of questions about TradingView, a lot of confusion here and there. So this video contains all the answers for all of your TradingView questions. Questions like, how do strategies even work in TradingView? Also, why is the backtesting tool sometimes flawed? And for example, the deep backtesting is basically useless in my opinion. I show you why in this video. Also, how to open or create a new strategy because TradingView has changed their user interface a little bit. Why you sometimes put a strategy on the chart and you see no trades happen whatsoever, how to fix that as well. Why the buy and hold return in the backtesting performance summary is actually a wrong measurement and how to do it better. Which chart to use when you are actually considering automating your trading strategies, and much more, everything in this video. That's why this video is very long, but that's because this should be kind of a lexicon for you, right? You can jump to the question that you have. Of course, you can also watch the whole video, which will help me a lot, right? Like, just do it, right? But if you just want to jump around, I will put timestamps down below in the video description, and you can jump exactly where you want to jump to, where you want to learn something. This video is long because it has a lot of information, right? So you're welcome, okay? I put a lot of time into giving you all this information in a very easy to understand way. So let's keep this intro very short in that case. And as always, this video is not financial advice. You can lose all of your money because crypto is very risky. But that is why you subscribe to this freaking channel. You watch my freaking playlist, okay? It's called Algo Trading Knowledge, and it will change your trading life forever, okay? You subscribe to this channel, you click the bell, you like this video, because then, and only then, your chances of making money are at an all-time high. Exactly. So with all of that in mind, let's get started. All right, guys, I have huge value for you in this video, and let's get started because we have so much to talk about and I don't want to make this video too long. We're going to go through all of this stuff that I have here in this diagram. First of all, we're going to look at what is data or the chart. What does it mean even? Then we're going to understand that this data is passed over to the strategy, right? And the strategy then does something with it. I'm going to explain to you all of that. And then I explain to you how the trading alerts then can lead to you automating the trading strategy on your exchanges, whichever you are using, right? And all of that I'm going to explain to you in this video. And we're going to start first of all with the data. I want you to understand what the data is because some people are a bit confused about this, and I understand because nobody explains this stuff. And so first of all, the data is the stuff that you give the strategy to work with. Okay, so it gets the chart. Okay, it gets basically the price information, the open, close, high and low, right? When you talk about candles, those are the 4 different data points. Plus some of the charts have a volume profile, right? How much money has been traded per day, right? And that is important because some of the trading strategies will need the volume data in the Pine script to work with, okay? But not all of them, depends which strategy you're using. If you're using the Gaussian channel strategy, then it's not needed because it's not using this volume data. But let's say you're using a different strategy and you don't have a chart that gives you the volume data, you will have issues, right? Because the strategy can't actually operate properly, okay? So the data consists of 2 different things. It is the chart, right? The price information and the volume information. How does this look like in TradingView? Well, pretty simple. If you go and change the chart, basically the data source that you want to give to your strategy, then you're going to see that you can get the Bitcoin USD values or data from Bitstamp. You can get it from Coinbase. But also you have the index chart, which is provided, as you can see by the logo, from TradingView themselves. So they are doing some magic to combine data together to give you even better data. And also the crypto chart, which is also a synthetic version of the chart given by TradingView or Binance and so on, right? So long story short, the exchange charts, the data coming from exchanges, they always gonna have volume information, okay? The problem is only that some assets are not listed on an exchange very quickly, right? So that means sometimes when you go to a chart from an exchange where the asset was listed very late, like for example on crypto.com, you can see that this Bitcoin chart starts only in November 2020. Now, well, that's not awesome, right? And the problem with that is that when I apply my strategy later on, I will show you in this video, then it doesn't have a lot of data to work with. But if you're using the right chart, aka the right data source, then you can have a Bitcoin chart that goes back to 2009, okay? Gives you more data, gives you more confidence that your backtesting data makes sense and it worked for a long time. So of course, I'm not going to use that chart because yes, it has volume data, but it doesn't really have a long price history. So long story short, if you want volume data, then pick only the charts or the data sources from exchanges, but also go through them and pick the one that has the longest price history, okay? Oftentimes you have Binance with the longest price history or Kraken or Coinbase maybe, right? Because they have been around for a long time. So make sure to know that. And then you have also the index chart, which exists only for Bitcoin and Ethereum. And you can find it by searching for ETH USD, right? And you find the index, but you don't find it for Solana USD, for example, or any other coin because simply TradingView does not provide it. But what they do provide is a crypto chart. A crypto chart combines data from on-chain and also from exchanges to have longer price history, but it is missing volume data, okay? So if you need volume data, then make sure to have the volume profile on your chart as an indicator, right? You can search for it here, right? Click on volume. And you can see it's pretty much, it's not there, no? Like there is no volume. You see there is an error even. So because the crypto chart doesn't have volume. If I go to the Binance data chart, then you see the volume data appears and I'm able to use it in my Pine script, or my strategy has access to it because the chart gives it to the strategy. Okay, so keep in mind, if you need volume, take a chart from an exchange. If you are trading Bitcoin, Ethereum, definitely then take the index chart because that's definitely the best one. And if you don't need volume data, then the crypto chart is the best one for you because it has huge price history. It goes the furthest into the past as possible. All right, we have talked about this. Now let's go to the next one, choosing the time frame. So going back to TradingView, whenever you're choosing a time frame, a lot of people are clicking on these buttons on the bottom here, which I don't even know what they're doing. So don't click it ever. It's fully confusing. Don't touch it because this is not the time frame that we're talking about. When we're talking about the time frame, then we're speaking of the time interval here or this one. So how much data is included in each of these candles, right? So in this candle here, or here, any candle of this includes one full day of information because I'm on the 1 day chart. But if you want to go to the 4-hour chart, now every candle includes 4 hours of price information. And you can also click here and you can just type it in. Basically, you can say 1 hour, and then it will go to the 1 hour chart where each candle is 1 hour, okay? But if you're using the Gaussian channel strategy, which I'm talking about a lot on this channel, then use it on the 1 day chart or on the 4-hour chart where I have a video explaining how to set it up so that it also works fine on this time frame. I will link it up top. There will be a lot of videos linked because I already talked about all of that. But in this video, I want to just put it all together so it's easy for you to understand. Okay, so you choose the chart, right? Remember, okay, you choose the chart, then you choose the time frame on the top here, right? But make sure whenever we're saying, hey, choose the 1 day chart, then it is about here, this upper region, 1 day, D, not 1M, because that is 1 minute, okay? So trading on the 1 minute chart, guys, is completely madness. And I will make another video explaining why trading on lower time frames is actually losing most people money. Like most people lose money on these time frames and it has a reason, okay? It has a reason, and that is why in our community, we're always saying use the 1 day chart because your chances of making money is way higher on that chart, okay? And long story, I will make another video because it's a long topic, okay? Just make sure to not be on the 1M chart because it looks here like 1 day, but it's not 1 day, okay? 1 means 1 minute, okay? Or 30 means 30 minutes. But if you're on the 1 day, it says 1D, okay? That is 1 day, okay? This is the one that most of the time would be the best one for you to choose. Now, let's talk about why it can happen that you have different numbers on different charts, although you're using the same strategy. And I kind of told you before, but let's figure it out. I'm back on the Bitcoin 1 day index chart, right? And I don't like all this information on the chart, as you know, so I go to style and I just disable all of that stuff because it's very annoying. Now, this strategy starts trading in 2018 and until the future with some parameters. It's all great. And these are the numbers that we get for that. That is nice. But what if I choose a chart that doesn't even go that far into the past, that doesn't start in 2018? Instead, it starts way later than that, right? So for example, if you go to the crypto.com chart, for some reason, you choose the crypto.com version of the Bitcoin USD chart, right? You click on that and then you get way different numbers, okay? You get only 135% profit with 22% drawdown, basically completely different numbers. And the reason is very simple, guys, because this chart, the first candle is sometime in November 2020, but this strategy started trading 2018. Like if you go to the other chart, it has this data and it can make money on it, right? Because it goes into the past until 2009, right? So when I start 2018, which is here, then it has enough data to trade on, okay? And that is the reason why you can have different performance numbers just because the chart doesn't start early enough, okay? But if you're going to, for example, the Coinbase chart, the numbers are very same. If you're going to the Bitstamp chart, the numbers are very, very similar. If you're going to the, let's say, Binance chart, the numbers are different. This started in 2020 again, right? So it's not good. So the numbers are not the same, okay? Because you can't even compare. So you always have to make sure that your time frame that you're trading on, right, and the chart, they're synchronized, okay? So you can't trade 2018 sometime here but your chart isn't there. Like it doesn't make any sense. So make sure to keep that in mind. A lot of people are super confused about this. So just use the best chart with the longest price history and then you'll be fine. All right, we covered all of these three. That is very nice. And we're gonna cover this topic here, why lower time frames are so hard to trade on in a different video, okay? So make sure to be subscribed. This is a very important topic. A lot of people are losing money because of that. So make sure to be subscribed. But now let's go over to the strategy part of the video and explain to you a lot of details on how strategies work on TradingView and make sure that you avoid a lot of the problems. Okay, over in TradingView, I'm back on the Bitcoin 1 day index chart and I want to show you how the strategy tester works. Basically, we're going to talk about exactly this item over here. And first of all, I want to show you that an indicator is not the same as a strategy. And you see what just happened there? Whenever I turn on an indicator, then the strategy tester doesn't do anything because the indicator doesn't do anything, right? It doesn't have any trading signals. There are no numbers I can look at. And that's fine. I mean, that's how it is, right? That's how it's done. And it does have, you know, inputs and everything, but it doesn't trade, okay? There is no trading signal. There is no backtest. There's no data you can use, right? But when you turn on a strategy, then you see immediately that it looks different, right? You see backtest information on the bottom. The strategy tester shows you the KPIs. It shows you the list of trades. It shows you the performance summary. All of this data is there. And also the chart looks a bit different because you see all of these arrows on the chart. And you can see, for example, that trading happened from here, right? This was the first trade somewhere. And then here there was no trading happening. Why is that the case? Well, because in the settings, it starts trading only from 2018. And that was exactly here, okay? And that's fine, right? And so these arrows, they mean something. It means that the blue arrow is a buy signal and the pink arrow somewhere here is the sell signal, right? And whenever you see blue, it means it was buying, going long. And when you see pink, it means it was selling, okay, closing the position. You can also short, but in this case, this particular strategy does not short. By the way, you can see that here as well, that it doesn't short at all, right? It only goes long. And if you have a strategy that is shorting, then make sure to check if it actually makes money when shorting, because a lot of strategies actually lose money when shorting. And let me show you that right now spontaneously. And I'm gonna search for the super trend strategy. And the super trend strategy, you can add it to your chart and you can see it actually loses money when shorting. So yeah, it does shorting. That's nice, but it doesn't really help you. Okay. So actually, if you would avoid the shorts, you would make more money. Okay. So make sure to check it. It's in the performance summary and you see it here on this side. All right. So let's remove the super trend because that was just a kind of a quickie. But I want to show you that you can basically distinguish between indicators and strategies simply by checking if you see any kind of backtest. Okay, so the indicator doesn't have a backtest, right? And the strategy does have a backtest. So that's a big difference. And you can automate only strategies that actually have trading signals. So if you have an indicator, then you have to convert it into a strategy first, which is why one of my videos has over 500,000 views, because I show you how to do that. And I'm going to link it here on the top right side of your screen. You can watch it afterwards. And if you have an indicator that has some labels on the chart that says buy and sell, it doesn't mean that those are trading signals, because as long as you don't have a backtest with actual numbers on how good this this indicator actually performed, then you don't know what you're getting into, which is again why this video that I was talking about is so popular, because indicators, they look better than they actually are, and you have to really combine multiple indicators to actually create a good and strong strategy, right? That is why there is another video on my channel, I will link it again, which is you take a strategy that already has some logic and you want to add an indicator to it to make it even better, right? I have a solution for that as well, so watch it later as well. Okay, let's go deeper into the strategy tester, and I want to show you a couple of traps basically that you might run into, okay? So if you are going to the performance summary and you go to look at the buy and hold return, it will show you some number. The problem with this number is, though, it's not really accurate, okay? And the reason why that is because the strategy tester, it thinks that the first trade that you made is also the first trade it should go from and calculate from there what the buy and hold return was. Now, the problem is, though, that your strategy avoided all of this stuff. And why not give the strategy basically this benefit? Because actually the trading happened on 1st of January 2018, right? Not here on the bottom, right? So in that case, you have to start measuring from exactly 1st of January and go until today. And you have to measure yourself, which is only 607%, okay? And by the way, if you want to invoke this measurement tool, then either you press Shift and click and then drag, or you go here, you click on this measurement tool, and then you click wherever you want to start, and then you drag it wherever you want to stop, right? And the price of Bitcoin is exactly here, right? So it's 500, 600%, and it's definitely not 952%, right? So it's a bit weird, and especially when you have a strategy that fully avoided the whole, let's say, the whole bear market, like my strategy, for example, here, right? And it started buying only, let me turn off the other one. It started buying only here on the bottom. Then the buy and hold return is not from here, right? Because my strategy started already here, okay? It avoided all of this stuff and it didn't make mistakes on the way down. So the buy and hold return again is 600% and not measured from here, which will lead into 2,400%. Let's check actually what it really says. It says 2,400%, but it's, again, it's not correct. It's just because these people here, right, they think that people have to trade on a daily basis or something like that. So the first trade is fine because they will trade a lot anyway. But no, I'm not trading a lot, okay? My whole point of trend following, okay, which is the whole point of why I'm so successful with trading strategies, is because I don't trade a lot only. I trade only when it makes sense. So if I avoid all of this, it doesn't mean that buy and hold return starts from here, because it means that you would be smart enough manually to buy the bottom. Like, nah, it's not gonna happen. So the buy and hold return calculation is simply wrong, okay? You just have to calculate it yourself, use the measurement tool, and start where your strategy is starting. And the strategy is starting, in this case, on 1st of January 2018. So that's where you have to start measuring, okay? The next thing you need to know is about the deep backtesting tool, because many people think that this is actually a more accurate way to test your strategy, but the question is it really more accurate? Let me show you how many bugs I was able to find with this freaking testing tool. So first of all, you see that the first trade that we have with this strategy, which buys when the price goes above the upper line, was here on the 25th of April 2018, okay? And if I turn on the deep back testing, okay, and I run it, and I give him 2018 as the start and basically today as the end, which is fine, the first trade was on the 18th of February. Now let's see where the price was on 18th of February, okay? So 18th of February, the price was exactly here. Was it above the upper line of the freaking Gaussian channel strategy? No. So this test is completely useless, because this trade would never happen in real life, because the price wasn't even close to the upper line of the Gaussian channel. So the deep backtesting tool is actually lying to me right now. And that is why, of course, I get different numbers, right? I get a bit less profit and I get a bit less profit factor and all this stuff, but it's, well, it's not accurate. It's simply wrong. And the next issue I have with it is that it calculates trades completely weird. Okay, so let me show you what I mean. So this is the third trade on this asset. This is Fetch AI, US dollar chart, Binance 1 day. Okay, and the third trade, if you actually put your eyes on this number over here and I turn on the deep backtesting, you see this was minus 12.53%. Okay, cool, a losing trade. I get it, right? That trade, by the way, was exactly this one here, right? This one. And tell me, where are the 12% loss? Because I don't see them, okay? So that's basically impossible, okay? This trade was about 4% loss, but not 12. So if I turn this on again, it's 12. And this happens over and over again, okay? And you can look at any chart you like on Fetch AI on this day, from this day to this day, right? 6th of June 2019 until 7th of June 2019, there was no 12% drop, okay? Any chart you look at, it didn't happen. So the deep backtesting tool is useless for me because it basically shows wrong numbers. The next thing you need to know is about avoiding unrealistic results. And I have a video about that, right? It's called Too Good to Be True. Again, a video I will link up top. Ultra important video, by the way. And let me show you very, very quickly on the Gaussian channel how I can make this strategy produce unbelievable amounts of profit. So I just switch from the percent of equity to contracts. And I don't change anything else. And you can see it makes 746,000% profit, stuff like that. If I go back to percent of equity, suddenly it makes only 1,895% profit, which is way more accurate, of course. And so, I mean, I explained it in the video, check that other video why that's the case. But guys, these are the settings, make a screenshot of this. These are the settings you should use for testing your strategy, because otherwise you get completely random results, okay? So 100% of equity, pyramiding, well, that depends on your strategy. You have to put a commission, you have to put slippage, okay? Because especially if you're going on lower time frames, on the 1 day is not so important, but if you go below 1 day, this is very important. And the next thing you need to know is about this checkbox here, right? Unrealistic results, number 2, basically, using standard open, high, low, close candles. So if I turn this off, okay, and it doesn't change anything now, but if I now switch to the Heiken-Ashi candles, okay, then suddenly it makes 9,667% profit. Magic, right? No, okay, it's just because you actually can see here the warning, backtesting on non-standard charts produce unrealistic results, which is the case. So that is why if you are using a PineScript version 5 or higher, you have this feature here to be able to use the Heiken-Ashi or some other non-standard candles, but to actually trade with the real numbers on the exchange at that point in time. So using standard open, high, low, close prices to buy and sell, because that's what the exchange will give you, right? But using the Heikin-Ashi to make decisions, right? So then the results are way more realistic, because now it's 1725, and actually it's worse than using normal candles, okay? So keep in mind, using non-standard candles, you must check this box. Otherwise, you are getting nice numbers, but they will not be realistic. Which is also why when I give you the Gaussian channel strategy, this is checked by default to protect you from this mistake. You're welcome. The next issue I see a lot of people have is that the strategy doesn't produce any trades, and your chart and your backtesting tool looks like this, right? It says the strategy did not generate any orders throughout the testing range. And that can have multiple reasons. Reason number one can be simply that TradingView doesn't yet understand that you have access to the Gaussian channel. You still have a red lock here. And in that case, simply, well, make sure you go here to the strategies, you click on get access, you put your TradingView username here, and you're actually using this strategy, the Gaussian channel strategy, okay, in this case, and then make sure to reload the whole TradingView thing just to make sure that it fully understands you have access and everything. But if it's still an issue, right, then click on this settings cog over here and then make sure to change the date range. Change the date range in such a way that it actually has data to work with. Because if you go into the past, you can see that the chart of Bitcoin was super strange in the beginning. It didn't even have proper candles, right? Those are not really candles. I don't even know what that is. So it can actually cause issues for the strategy if it requires, you know, open, high, low, close information. Depends on the strategy, of course. And you see, the first actual real candle was on the 5th of May, 2010. Now, if I go here and I put 2010, 5th of May, right? And I click OK, then you see the message has changed. Now it says, cannot create any order with negative quantity. It means basically, it means that it lost all the money, okay? So at some point it started losing all the money, and that is why it doesn't show anything, right? Because it always trades with 100%, and at some point it has no money left, because when you start so early, the strategy didn't really produce proper results. I mean, basically lost all the money, okay? So if you want to start from a different time, then this can give you results. Now you see I changed it, and still on the bottom I see nothing. So I will click on save on the top, and I will just reload the whole thing. Often I have to reload, honestly, because otherwise it will not really understand what just happened. And so you can see when I start 2011, then it actually works. Let's go further back. Let's see how far back I can actually go. 2010, 5th of May was, well, the problem. June, let's say July, let's say maybe October. Okay, October seems to be working. You see, save. And the strategy tester is still mega confused. So again, I have to save the layout so that it saves also these settings, right? And then reload the whole thing, okay? And boom, it works, right? So this can happen. It's just, you know, some glitches, some bugs in TradingView, but overall it works if you do it like that. The next thing that is a bit confusing is that TradingView changed the layout for the Pine script editor a little bit after I made my crazy videos, which got 500,000 views. And I want to show you very quickly what changed. You click on the Pine script editor, and most people are asking, hey, where is this button where it says open, so I can open a new strategy or create a new strategy? And they simply moved it over here. You see this small arrow, manage script. And what you can do now is you can open a script, right? Or you can also create a new one and click on strategy. And there you go, same as before, just that the button moved into this menu. The next thing I want to talk about are trading alerts. And I see a lot of people doing small mistakes, but they end up being catastrophic. So let me explain exactly what's happening here. So if you have a strategy open, right, then you have a strategy backtest, which is amazing. You know all of that. That's great. You want to take advantage of all of these buy and sell signals. You want to fully automate them. Well, I have a video, I will link it up top, but in this video, I want to show you some of the mistakes that people make, which is funny because in my automation videos, I show you exactly how to do it. But if you are clicking on this button here to create an alert for the trading strategy, that's fine, right? You'll be fine. But if you have the weird idea, okay, to open the alerts panel and to click on this plus button to automate the strategy, that is wrong, okay? Because here you are automating the condition of price crossing some value, right? That's not the same as, let me show you, automating the strategy where the condition is the strategy itself, okay? Which is completely different, all right? So if you're automating a strategy, then please click the alert button next to the strategy name inside of the strategy tester. It's a completely different feature, right? I know it looks the same for you, but it's not, okay? It's fully different. So you have to click this button here, right? And then you go to Signum. You know how it works, right? You go here, you click on whichever strategy you have, you copy this message and you put it here, right? And you give it a name basically. The name is also given here, so just copy this, right? You know this from my videos, right? And then you have to make sure to have the webhook URL put here as well, which is another thing you can copy from Signum, where it will basically then fully automatically execute the trade, right? So all of this will be sent to this URL, to Signum, and it will then basically automate. In this case, it will send a signal to my Binance account that's connected with this API key and all this stuff. You know all of that if you watched the other videos, and if not, well, you will watch them, right? Because you want to automate your trading. But the next thing that I want to show you is after I create this alert, it will appear on the right side. And a lot of people are not sure, how can I see which settings I was using in this strategy? And oh my God, you know, because you are confused about how to see what the alert is actually doing. And then on top of that, you are afraid to actually change anything in your chart because, oh my God, if I change the strategy, if I delete it from here, then my trading alerts will not work anymore. But that's not the case, right? Because the trading alert is there forever until you kill it, right? Or until it expires, because you might have a plan where you don't have open-ended alerts and they will expire whenever the date is hit, okay? Depends on your plan. I will talk about this later. But after you created the alert, right? The alert has everything inside of it that it needs to run forever, like I said, unless it expires. So as you can see here, when you hover over with the mouse on your alert, you can see everything, okay? You can see the chart, the name of the strategy, the parameters of the strategy that you have been using. And by the way, you see here is HLC34144 1.414, and those are the numbers that you see here in the, well, let me put back the strategy that you see here, right? In the inputs, right? You see HLC3, 4, la, 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 right? Those numbers are part of the alert, so you can actually know which parameters it had. Yes, granted, it doesn't show you the properties, so any settings that you made here will not reflect in the alert, agreed. So if you want those, then put them in the title, right? You can just put anything in the title that you like to remember parameters that you want to remember, right? So that is not a big issue. Then you see the payload, right? This JSON file with the brackets. And also in the small version, without hovering over, you can see the chart, the time frame, that it's active and stuff like that, right? So all this stuff shows you that you did it correctly, right? It shows you even after 3 months or 1 year, if you hover over what is actually happening here, right? And so you can fully delete the strategy from the chart. You can go to another chart. You can do whatever you like. And this alert will not be disrupted by any of that, right? So the chart on the left side, yes, it matters when you create the alert. In the moment you create it, everything has to be perfect. But after you created the alert will be set in stone, right? And it doesn't change anymore. So don't be afraid to mess around after creating the alert. And then one more thing you need to know is if you click on the alert, it will take you to the chart. It will take you to the same time frame that was used here in the alert, but it will not activate the strategy because it's not even on your chart. And the reason for that is that most people don't have, you know, unlimited indicators, so it can't simply add it for you because it depends on your plan. So you hover over here, you see this is the Gaussian channel strategy V3. So you simply add it back onto your chart in case you deleted it, right? You make sure that the parameters are the same, right? The ones here, right? With the ones that you see here. And well, that's how it works, right? So if you have a plan in TradingView where you can keep it here because you don't run out of indicators, then keep it here, right? But doesn't matter, right? Even if you delete it, your alert will still continue working. Another thing that confuses people is, can you have multiple alerts on the same asset? Yes, of course you can. And so you can basically, let me give you some examples. You can go to the 4-hour chart, right? You can set up the Gaussian channel so that it works well on the 4-hour. I have a video, I will link it up top on the parameters that work well on that. And then you create another alert, then you have 2 of them. Then you can even turn on a different strategy. You go back to the 1 day, right? And let's say you want to use this one. This is mine, for example. You want to use this one. You create another alert, right? But of course, each of these alerts will go to its own bot on Signum if you're using Signum, right? And that's the thing that I would recommend to use. And then each of them will go to different sub accounts, right? So that the funds are always separated from each other. So each alert has its own bot and each bot has its own account. And that makes it very easy to keep funds separated from each other. And you can see the profit and loss for each one. And you know exactly what happened, right? Even after years of running these alerts. So you can use multiple alerts on the same asset, multiple strategies on the same asset. So that's no problem, okay? Just go and do it if you want to do it. One limitation you can have is the pricing plan that you're using. So you need at least the essential plan so that you can actually use the webhook feature. Otherwise, it will not allow you to send these price alerts or these technical alerts, how they call it, to a different software for trading purposes. So yeah, you have to have at least the essential plan. Essential plan costs you, well, not a lot of money, to be honest, for the value you're getting, but you can create 20 technical alerts. And as you can see here, they refer to indicators, strategies, and drawings on the chart. So let's say that you can automate 20 different trading bots, okay? Then if you go to the plus, you can have 100. And if you go to the premium, you can have 400 technical alerts. Like nobody needs that, right? But the premium has another thing that is very cool, which is that your alerts don't expire, which they do expire on the other plans, meaning that you have to come back if you have the premium, if you have the plus or the essential, you have to come back every 2 months and you have to go through all of your alerts and you have to edit them and put the date into the future, right? As far as you can. And they allow you only 2 months into the future. If you have the premium, you can click on open-ended alert and perfect. So that can be very cool for people that are on vacation for a long time or on business trips or whatever, and you want to have complete peace of mind, then well, take this plan and it's much better for you. Okay guys, wow, we went through a lot of stuff, and as you can see here, we have checkboxes on all of these things that I wanted to show you. And the last thing I want to show you, just to give you an idea on how automation actually really works. So basically you have a strategy, right? And the strategy produces these trading alerts. They will go through the trading alerts, and then this alert, right, this is actually triggering the signal to go to whichever software you're using for automation. In this case, here I have Signum, which is my own software, and it's very, very easy to use. It's made for retail investors, right? Because it has to be simple, right? Not complicated like the other guys. And I have 2 videos which are quite popular for showing you exactly how to automate. I will link them up top as well. The first one is how to automate any trading view strategy without coding. So this is very nice, of course, Signum. And then also how to automate specifically the Gaussian channel strategy, which is very popular. And so you can get started with the strategy in your hands with automation, and then the signal is sent to whichever exchange that you are using. And we're going to add more and more exchanges, but those ones cover the whole world. So definitely you're going to find one that you need, right? So keep in mind, TradingView executes the alerts send the signal to a software that understands what to do with them, and then in this case, Signum is sending the trading signals to your exchanges to actually buy and sell for you automatically. And if you actually want to learn how to automate right now, then this is the next video you should watch.
Green, it's trading view. Ooh yeah, ooh yeah. Strategies, we know what to do. Yeah, ooh yeah, yeah. Stop loss, set, watch the bars rise and fall.
That's right, guys. In this video, we're gonna learn how to evaluate a trading strategy based on the numbers from TradingView. You're gonna learn which numbers are good, which numbers are bad, which strategies to stay away from, and of course, how to compare them against each other. You guys are creating a lot of trading strategies now that you know how to do it with AI. My previous videos went through the roof, as you know. That's why you subscribe to this channel. Now, the next level, right? The next stage that you have to reach is how to compare these trading strategies with each other based on the numbers you're getting. And guys, having these numbers is actually a blessing. It's very nice, right? Because you were having no numbers at all. Before that, you were using indicators. Okay, now you're using strategies. Okay, cool. So you made the step from indicators to strategies. Great, congratulations. But now you need to also be able to use these numbers to make a decision, right? I'm gonna show you exactly how to do that in this video. We're going to look at max drawdown, profit factor, percent profitable trades, net profit, and other numbers. And we're going to use some very simple mathematics, which you're going to learn. And then you can do the same as I do. You can evaluate trading strategies against each other very, very easily. And thanks again for the massive support that you give me, guys. I appreciate each and every one of you, which is why I urge you to come to the Telegram group. The link is down below. It's fully free because I can give you even more value, right? You come to the group, you ask your questions, you learn more about strategies, automation, numbers, all of that, right? And we help each other there. We even have people that started to help other people. It's not just me. Speaking of which, I want to mention these awesome people which are in Telegram helping other people all the time. And I'm very much appreciative of that. I think everyone else is. So thank you very much for being there. You guys are awesome. And if you want a shout out, then just simply be helpful to other people and you will make it in my next video. So it's a great group for that. It's not for trading signals, okay? Don't come and expect buy this coin or something. Not that, okay? Go somewhere else for that. Here, we're learning about trading strategies and how to apply them, how to automate them, and how to increase our chances of success. Having said that, this is not financial advice. Crypto is risky. You can lose all of your money. But that is why you subscribe to this channel, you click the bell, and you make sure to watch all of my educational videos, because only then your chances of making money are at an all-time high. And with all of that in mind, let's get started. All right, guys, on the chart behind me, you can see the following strategies that I have prepared for you to go through in this video. We're going to look at the Gaussian channel strategy. We're going to look at also the improved Gaussian channel strategy from my previous video where I used AI to add the stochastic RSI to improve a lot of the numbers. We're going to look at the whole suit strategy. We're going to look at the HODL strategy. And also we're going to look at my strategy just for comparison, not in detail, okay? So we're going to go through all of that and we're going to look at the numbers and then figure out which strategy is the best one. Of course, all of that based on numbers and not based on my opinion. Let's go. Okay, I put myself here onto the bottom right so that you can see the whole chart. You can see all of the relevant numbers. And the first number I want to talk about is the max drawdown. The first number I look at whenever I put a strategy on the chart is the max drawdown. If the max drawdown, guys, is too high, I don't care about this strategy. In this case, it's 30%, but too high is 50% or more. Okay, guys? So if it's more than 50%, that means that my portfolio might end up being 50% worth less money than before. That is not good, okay? So because the max drawdown is not the max loss, that's true, but it could end up in a loss and I don't want to take the risk. Remember, guys, that trading and investing is always about risk and reward. So you cannot only look at the net profit, that's the reward. You have to also always look at the risk and you have to create a ratio. Hint, hint. I'm going to show you how to do that in this video. Okay, so 30% is fine because it's below 50. Very simple. So that's rule number one. Rule number two is to look at the net profit. And the net profit is the other part of the risk reward formula, right? So it makes money. Okay, cool. It makes money. But now the question is, does it make enough money for the risk I'm taking? Okay. And I'm not talking about profit factor. That's a different topic. Okay. So max drawdown and net profit are somehow in a relationship with each other, right? But what is the relationship? Well, it's very simple. Let me put myself here and explain. So what I do, guys, right? I take the net profit percentage. I take the percentage because then it doesn't matter how much money you invest. And this will always work. So you take the 1894.9. So let's round up to 1895 and we divide it by 30. And then you get a ratio of about 63. Okay, so remember that number because we're going to do the same for other strategies. And then we can rank them based on that. That's not the only number, but we can rank them based on that as well. So that is the next thing that you have to do. That's rule number 3. Okay, so you had the max drawdown by itself, the net profit by itself, and now the ratio of those two, right? Nice. So we're making progress. But the next thing I want to tell you is actually something very important, which is that you will gonna have the idea to compare this with the buy and hold return. Okay? Nice. It's not a bad idea, right? But the problem is that you're only comparing the reward. You're not taking the risk into account, which is why I want to show you this stuff to keep you away from trouble, okay? So if you want to now check what is the buy and hold return for this strategy, right? It's 843% because that's basically what TradingView calculates from the first trade that ever happened, right? From here until here, 800, something like that, right? Very close. But the problem is the TradingView starts from the first trade, while the strategy actually started trading over here on 1st of January 2018, right? As you can see here. So if the strategy avoided a lot of the drawdown and only bought at the bottom, then TradingView will start calculating from the bottom, which is not really fair. I'm just saying, right? Okay, so that's one thing you need to just understand how TradingView works. So it goes from the first trade and pretends that it was also invested from the first trade. That is not correct. So that is why I have a strategy here. It's called the hodl demo strategy. I just developed it myself. If you want the code, I will put a document down below, and then you can just copy the code from that and you can use it yourself. Now, the only thing you need to do is to always put it one day before today so that it also sells, because it doesn't sell, then you don't see any numbers, right? So the max drawdown is 76%, okay? So just looking at, going back to the Gaussian channel strategy, just looking at the buy and hold return here will not give you the full picture, okay? You have to use the hodl demo strategy to actually figure out what was the real return of the hodl strategy, right? If you start at the same time, right? And then you take the risk from the same point in time, which was the 1st of January, right? Then you have a drawdown of 77%, I'm rounding up, right? Now let's do the same ratio calculation for the hodl strategy. So we compare now the hodl with the Gaussian channel preliminary, because we're not yet fully through with all the numbers. So now take the net profit, 573 divided by 77, okay? And you get a ratio of about 7.4. This is way worse than the Gaussian channel strategy. You already know that hodl is bad, okay? Like, that's obvious. But you now also know how I calculate this stuff. Yes, sure, you can look at the drawdown already and you know already that it's about 50, and so it's already bad, okay? Yeah, Michael, but what about the DCA strategy? Well, here you go, the DCA strategy from the same time frame, selling yesterday, so that we have the numbers. You can see 585% profit with a max drawdown of 13.3. Let's divide these numbers and you get to a ratio of 45. Yes, that is better than the hodl strategy, because the hodl strategy is the worst strategy in the universe for individual assets. And if you're not sure what I'm talking about, then watch this video here that a lot of people have watched already and opened their eyes, but watch it only after this one. We're going back to the Gaussian channel strategy to understand the profit factor, and that would be rule number 4, okay? So the profit factor, first of all, how is it defined? You can see here, it is the gross profits divided by the gross losses. If you want to calculate this number yourself, simply go to the performance summary and divide this by this, right? It's very simple to do, and this is the number, 3.2. So the profit factor, and don't confuse it, right, with the net profit versus max drawdown, because that ratio is how much your portfolio is actually fluctuating up and down, but it doesn't mean that you actually realized that max drawdown, okay? It was just a max drawdown. But the profit factor shows you how the ratio is between the money you made and the money you lost. So that is the actual money that was made and lost. And obviously, this number has to be above 1. And the more it is above 1, the better. Okay, you see here 3.2, that is pretty good, right? But can we do better? Yes, there are strategies that do 5 or even 6 on Bitcoin, but on certain altcoins, this could be a huge number. This could be 40 or 30. And it doesn't mean that that strategy is good on every coin, right? But often you have this massive volatility to the upside, and you were lucky to have only a couple of losing trades or maybe none at all and just make one massive winning trade. Then, of course, the profit factor is huge, right? I mean, you have to have at least one losing trade, otherwise they divide by 0. But let's say you had a losing trade of 1%, but then you made 100%. I mean, that profit factor would be massive, okay? So don't take that profit factor too seriously if there are not enough trades on the chart, or also if the chart doesn't have enough price history, okay? So if you're looking at a new coin that starts in 2024, it just launched a couple of months ago, then the profit factor, you can't really take it too seriously, okay? But sure, it's one of the numbers, it's rule number 4, like I said, and that is also why it's not the most important rule, but is one that you have to look at. Let's go back to the chart, Gaussian channel strategy on the chart. The next number you should look at is the percent profitable trades. You can also call it the win rate. I will call it the win rate because it's easier to say. And in this case, it's 29.27%. Now, is that good or bad? And what is the rule we have for it? Well, let's think about it a little bit. So if the strategy wins more trades, then it should be a better strategy. Well, not necessarily, because the question is, when it wins, how much does it win? And when it loses, how much does it lose? So does it really matter how many trades it wins? Well, it's a psychological thing, right? Because if you have a strategy, and let me show you this right here, that is losing a lot of trades and only then makes one massive winning trade like this one here, right? But before that, you had 1, 2, 3, 4, 5, 6, 7, 8 losing trades. Would you still use this strategy? because it's psychologically a massive problem, right? So it is not so much a mathematical issue, but it's more like a psychological issue. So if you can choose a strategy that wins more, it's better for you, because the chances for you to stick to the strategy and to use it for a long time and benefit from the numbers is much higher when the win rate is higher, right? So yes, it's part of the calculation. It's not the most important number, but I'm looking at it as well, and I do take it into account when it comes to my overall decision making. While this number is not disqualifying a strategy necessarily, so rule number 5 is not a particular number that has to be above or below, but it has to be better than the other strategy that you're comparing for. So the rule here is that higher is better, but there is no particular number it has to be above. It just has to be better than the other strategy you're looking at. And it also has to match your psychology, so make sure that you can survive a lot of losing trades if you're picking a strategy with a low win rate. Now you know which numbers to look at, how to look at them. Now let's take all these trading strategies, turn them on, and check the numbers and figure out which strategy is the best one. And at the end of the video, I will tell you one more thing that you must do when evaluating trading strategies. Stick around, let's go. Now, we're gonna look at the improved Gaussian channel strategy, which is the one that I've created in my last video by adding the stochastic RSI to avoid a lot of these losing trades. If you want to know all about that, then simply watch my last video. I will link it up top. And so these numbers here look a little bit different. You see that the drawdown is way lower. The net profit is pretty much the same, but the profit factor now is 6, and the percent profitable trades is 50. So it's way better. Like, without doing any calculation, I can already tell you that is way better. But let's do the simple calculation where we divide the net profit by the max drawdown. And when doing that, we're getting to a factor of 130, which is pretty good and is way better than the previous Gaussian channel strategy. Okay. The other numbers you can check for yourself, that's all fine. And then the whole suit strategy, well, you can already see that the max drawdown, the first number I'm looking at, rule number 1, is above 50%. So I don't care about this whatsoever. Okay, so let's get out of here. Then we have the hodl strategy with 76% max drawdown. Get out of here. We have DCA, which is a bit better. You can do the calculation. We did that already. The DCA strategy has a factor of 45, right? But doesn't matter. It's already pretty bad based on all the other numbers, basically. And then we also have my own strategy, which has these numbers. And I'm just putting it out there so you see how it could also look like, right? Which has these numbers over here. And if we're doing the calculation, then you will see that the factor between net profit and max drawdown is actually only 125, whereas the Gaussian channel, the improved one here, was actually at 130. So that looks a bit better, right? So it looks like the improved Gaussian channel strategy is better than my own strategy. Well, is that the case? Now, I want to show you one more important thing when it comes to evaluating strategies, and that is to apply the same strategy on different assets. Because if it works on one coin, I mean, I can make a strategy that works even better than the Gaussian channel strategy on Bitcoin and has 100% win rate, but isn't that overfitted to the coin? Well, yes, of course it is. And when a strategy is made for just one coin and it works super great on one coin, then there is a risk that it doesn't work on that same coin with future data, right? Because it is made for the past, it's overfitted to the past, but what if the future is a bit different? For example, Bitcoin now has an ETF, right? Different players are now playing the game as well. So they might change the game, but you don't know, right? So you need a strategy that is general purpose that can deal with that as well, right? Not only with the past, but also with the future. So that is why you have to also take all of these strategies and apply them on other coins. And I will just look at the improved Gaussian channel and my own, because the improved one is the best one. So I have less comparing to do. I only have to compare two strategies with each other because the other ones are already out of the question. And I'm using my own strategy here because I want you to learn something specific, and I don't know which other strategy I can use to prove that same point I want to prove in the coming segment of this video. If you know another strategy, then let me know. Come to Telegram and chat with me there. So let's go to Ethereum, right? Because why not, right? Go to Ethereum. You have the Gaussian channel strategy making, okay, first the max drawdown, 53%, screw that. Now let's go to my strategy, 29.7, let's say 30, 2,500% profit. Let's go way better without changing any parameters, okay? So let's go to Solana. This is the improved Gaussian channel strategy, almost 49% max drawdown with 10,544 21% net profit. The factor, by the way, is, I will put it here on the screen, is 215. And let's go to my strategy. We have a max drawdown of 37 and a net profit of 20,914. The factor, again, I will put it here on the screen, is 565. Okay, that's a different universe, and that's why you need a strategy that is robust. Okay, let's turn it off again and let's go to Polygon Matic, and we have the improved Gaussian channel strategy, 71% max drawdown. Screw that, that's too high. Let's go to my strategy, 36.28 with 4,744% net profit. So that is on a different level, and that is why it's so hard to create very good and robust strategies. So make sure, guys, why am I telling you all of that, right? I'm not telling you that so that I'm saying use my strategy. No, okay? I'm telling you so that you can go here, and when you mess around with the settings of the Gaussian channel strategy, then make sure to not have the settings in such a way that they work only for one coin, okay? Make sure that they work for more coins, okay? That is actually the message over here, right? And so once you manage to do that, then you have a more robust version of the strategy, okay? So it doesn't mean the Gaussian channel, the improved one, is bad or the old one is bad. It's just that you need to figure out the right configuration. Maybe you need to add another indicator to it, which we know how to do that, right? Because we have the freaking AI video that you guys love. It's linked up above. Okay, so that is the message here, guys. Make sure to not overfit your strategy to one coin only. Okay, guys, now you know how to evaluate a trading strategy properly, also on different coins. And I want you guys to go bananas with this because it has the potential to change your life forever. Okay, mess around, create a strategy that is not overfitted, works on the coins that you like. More than one, yes, more than one. We want a robust strategy. But please take this knowledge and apply this knowledge, okay? Don't just listen to my voice and the guy is funny and drinks coffee and everything. By the way, cheers. I love this stuff. But take this knowledge and actually apply it, okay? Please make it happen and come to the Telegram group, share your questions, but also share your successes, okay? Share your freaking successes to also motivate other people to do the same thing, because not everyone will have the same strategy, so that's fine, right? And this way you're giving back a little bit to help other people, which is always nice. And if for some reason you want access to my trading strategies, then go to autotrading.vip. But hey, my calendar is full until January already. So make sure if you put some information there about why you apply, then put something interesting, because otherwise I cannot move you forward. Like, it's very hard for me, okay? A lot of people want access. It's hardcore. I'm in calls all day long during the week. That's why I'm making videos on the weekend, okay? Having said all of that, if you want to learn about automation, you want to automate a trading strategy, which I think you should because that's the way to avoid emotions and all, then this is the next video you should watch.
Green, it's trading view. Ooh yeah, ooh yeah. Strategies, we know what to do. Yeah, ooh yeah, yeah. Stop loss is set, watch the bars rise and fall.
That's right, guys. Indicators are not as good as you think. They might look good when you look at it with your own eyes on the chart, but when you actually turn them into a strategy to buy and sell, they are not as good as you think. And you only see the true nature of these indicators when you have the numbers to actually back it up, which is why I'm making this video, guys, to show you how good and bad some of the indicators truly are. I've taken 5 of the most relevant and most popular indicators and turned them into a strategy so that you know the truth. You might be using these indicators, you might be thinking that they're good, so let's see. The indicators we're going to look at in this video are the bull market support band, super trend indicator, MACD indicator, Bollinger Band indicator, and SMA 200. And once we've turned all of these indicators to a strategy, we're going to compare it with a proper trading strategy which combines multiple indicators and has been working for a long time, just to see what a proper strategy would result on the assets we're looking at, and as well what these indicators would result. And again, the results are shocking, guys. You would be quite surprised, guys. So make sure to stick around until the end of the video to fully understand why indicators are a bit tricky to use and how to solve the problem. At the end of the video, I will give you the perfect solution, in my opinion, to the whole problem. And no, it's not coding, okay, guys? So stick around and you figure this out. And if you're a returning viewer, then you notice that this is not my usual studio. It's because I am traveling right now. I'm in Dubai. I will be speaking at a couple of events. I took my equipment with me so I can still produce videos for you guys wherever I am. So if you appreciate this, guys, then make sure to like this video, subscribe to the channel, and as well, let me know down below how you like the setup. And as always, guys, this is not financial advice. Crypto is risky. You can lose all of your money, guys. But that is why you subscribe to this channel, because I'm raising your chances of success by sharing knowledge with you guys, right? Sharing knowledge about strategies and strategy automation, and giving you everything you need to just be better than everyone else, guys, right? So make sure to like the video, make sure to subscribe. And with all of that, let's get started. Okay, guys, this is the Bitcoin chart, and those are the indicators and the strategies we're gonna go through. We're gonna go top down in no particular order. So at any point in time during the video, you can find out which one is better than all of the rest. So I guess you have to watch the whole video to really capture all of the knowledge I have for you. But are they profitable only on the Bitcoin chart, or will they also work on other assets? We will find out in this video. So guys, let's go top down. We start with the indicator called bull market support band. And you might know this one because a lot of people are talking about it. Now, when would you buy and when would you sell when looking at this indicator, guys? Would you make money with this or not make money with this? Look at it simply with your own eyes. Would you buy when it crosses? Would you sell when it crosses? Would you buy above the green line or above the red line? Or how would you do it, guys, right? Would this indicator make money or not? How would you figure this out? You don't really know, okay? So turning this into a proper strategy helps you to figure this out. Now here below it, I have the bull market support band strategy, okay, which actually buys and sells.